All right, let's see what we got. Let's see if it's working. Not working. Oh, we're good. Guys, how does a section on this editor, how does it go and just completely change itself? Because you have to unlock it. I get it's a computer, it's technology, and I was like kind of taken off guard. I didn't see really what was going on. Thankfully, it was not too much of a crazy day where there was a ton of momentum and whatnot. So I did make about 3 trades so far, 2 trades. Um, not really, not really anything to write home about, but not any losses. Here goes the spy. As a matter of fact, thank you guys for joining us. I'm Justin. It's the Ivy League live stream. I had some issues earlier with the stream. Really, it wasn't the stream itself, but I was just having problems with the volume. So let's go. So what am I looking at? I've been looking at shop double top here. Looked like you wanted to break out of this pennant, but I think if it holds up here, you might get a run towards lunch and afternoon, especially if it can hold these highs right here. And notice the volume, okay? So what I'm doing is I'm trying to show you guys. Look at this volume. It did peek its head out to the south side, and it may just change and give up. But remember what we talked about last night. If you guys did not catch last night's live stream, okay, look at this. We're gonna measure our move. All right, we're gonna measure the move, which is from here to here, pretty much. No, 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 I didn't want to do that. All right, and you're gonna find that this takes us right into a gap. Funny enough, so I'm expecting it to hold. I'm expecting it just to consolidate, and then the shorts start to give up, and you just whoop, 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 and you get these candles out of nowhere with short covering. Okay, and if we get it, I don't know, right around this area. I was thinking VWAP. We can put it at VWAP. No. No. We'll just throw it at VWAP for now. Gotta give the time stock to do what it's gotta do, guys. Remember that? Oh, well, would you looky there. So I'm almost like certain that we can get this move up there, guys. So this is what I'm watching. This is one stock that I'm watching, this shop. I made a play on it already. Small green trade. I made a play on, I don't even remember what it was. I have no idea what it was. AMD, I think. Oh, roadblocks. 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 I was short AMD and I was long roadblocks. I do not have a position in them. It's a consolidation. Okay? If you were at the live stream last night, you would have caught roadblocks. Okay? There's a beautiful lesson in this roadblocks trade. Trading's not hard. It's just, it can be hard if you just don't know what you're doing and you second guess yourself and things like that. Like, for instance, this was the entry. The low. I literally entered. I'm going to put this here. Literally, I bought it, and I made sure I did. As it was going down, where did we buy it? What time is it? I was wanting to say right here, literally right on VWAP, 38.2 Fibonacci, high a day. So you have the high of the day, or the initial morning open. You have a pullback into it. You have the 38.2 Fibonacci. You have your VWAP sitting there. And what did you get? Boom. Boom. I took it off right here. You want to know why? Because these pullbacks were killing the contracts, being a daily. So I just took the money and ran. And then look what happened. Shoot. Fell out of bed. Needs time. Needs a little time, guys. But thank you guys for joining us. We are trying to get to 100 likes or 100 subscribers. If you guys could hit the subscribe, that'd be cool. Thank you guys for hitting the like. Again, we were on earlier. There was mic issues. It wasn't the mic. It was the studio that we go through, and I. The thing is that it's locked, and you have to physically unlock it, and then go into it to make changes, and then, it just. So I don't know how. It just did it by itself. Is what happened. Or, we have bigger problems if it didn't do it by itself. So that's where I'm at with the day. We're literally trading sideways, unfortunately. A lot of these moves have been coming pre-market and aftermarket. So I'm gonna look around and see what we can find. You guys will see if I make any trades. Hope you guys have had a good day. Do you guys see anything? Is there anything running that I'm missing? If there is, just let me know. It's greatly appreciated. Let's think, guys. Last night's live stream was awesome. Yeah, I don't think how many people realize the amount of information that's in that live stream. There's a lot of information in that one live stream. But that's what we're here for. So, the S&P's just sitting at VWAP. Literally just going up and down. Shop's putting in this it's like a bull flag. And I'm just sitting here waiting for the breakout. Honestly. What I could do is I could do a Fibonacci retracement. I could do a couple different things. I feel like we're gonna get this thing very soon. Wow. Watch out, guys. Shop might get ready to be in play. Yeah, guys, shop's getting ready to be in play. We'll see if this goes to the downside, if it's a failed breakdown. Like where it comes down, it pulls back up to retest it and can't get back up above it, or it does get back up above it, and then you buy the dips for a long because it might shake them out. We'll see how it all sets up. I know the volume is to the buy side. I've been watching level 2. I've been watching the candles, and it tells us, it gives us the picture we want to have to build up the conviction to go long or short, So, man, I could use a ham cheese sandwich. I could use a sandwich with some bacon. Some bacon, some roast beef, something. I'm starving. But I can't eat. I gotta go wait for this. Because as soon as I go to eat, this thing's gonna rip. Or it's gonna do something. Or it's not gonna put in the formation. Or it's not gonna give us the, it's not, I don't know. I don't know what I'm saying. It's tired. So last night I was up late. I had a lot. I did some things around the house. The live stream was pretty late. Yeah, sometimes there's other things in life you gotta attend to. But I'm really curious if this thing can get up to that area. If you guys are thinking about playing Shopify, get time with it. Get some time with it. And let me apologize as well for the streams messing up this morning. Now I know what to look for if it happens. I kind of just had to put it to the side and then come back to it later, and then I came back to it later and I'm like, hey, this isn't moving. Why isn't it moving? So I fixed it. Hey, baby. Abby thinks I'm talking to her. It's so funny. Hey, yo, you good to eat some mooches? You see? You say hello? You say hello? Smooches? No smooches? I have the most beautiful cat, don't I? Come here, baby. Look up. Look at those eyes. She's so soft. She's got the best looking paws. She's probably gonna scratch me. She ain't gonna scratch me, but it's just a daddy and daddy daughter world. This my you the babies. Her such a. She's so like, I don't know. She's not like any other cats that I've been around or know, because she's like so human, and she's been around me and my girl just about her whole life. And Shopify's looks like it's getting ready to break down, guys. That's a break. I don't want to overtrade. You start overtrading, you start paying a bunch of commissions, and then you start making wrong decisions, etc., 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 and that's where things go wrong. But she's just been around us, and I don't know. I can't explain it, guys. Like, she wants something to eat. She talks to me. She says, "Dad, I want to eat." In English, she says, "Dad, can I have some chicken?" I'm just kidding. But we're close. We're close to getting her to talk in English. Spanish, she can speak a few words of Spanish. Watch, people are getting ready to leave. People are going to leave, and the market's going to go 11:30, 12 o'clock, and the rest of the day. Watch. Watch. This is a nice setup, it looks like. Look, 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 look. There it goes. I just told you. I just told you. Yeah, we don't leave you during lunchtime like the other people's to go fend for yourself. Nope, we don't do that. Nope. We ain't doing that to you. What do you guys want to go over? You guys have any questions? Any ideas? And yes, I know. I need a haircut. I shall be getting one this weekend. What are you doing, girlfriend? Yeah, they were saying that earlier that these crypto plays were crypto was down, and
To
hey,
our destination. So
hey, there
remember,
we
we've
go.
hiked rates over 500 basis
Let's
points. I'm sure
go.
your viewers do remember this. We've hiked rates over 500 basis points in short order,
Talk
and we've
that
moved
talk.
from 75 basis points at a meeting to 50 basis points at a meeting
This
to
is
25 basis points at a
Fed
meeting.
Daily, just so
So
you
we
don't
could
know,
have
or
gone
if you
12 and
don't
a
know,
half,
now
I
you
guess,
know.
in June, and then 12 and a half
San
again
Francisco Fed,
in
I'm pretty
July,
sure.
if you thought that's what was penciled in. But
Looks like
another
she'd
way
be
to
on the
slow
bank
the
of it,
pace is to simply
SVB, and
stand
not
pat for a
really,
meeting. It also allows you, and I
you
think this
know,
is
I
really
don't know.
important,
That's
prudent
wrong of me to say
policy
that.
right
I take
now
that back.
requires, it
I was just
demands that
joking.
we
She
not
just looked like
declare we
she,
know when we don't know. We actually
you
don't
know.
know a lot of things. What would happen
It's just funny how
yesterday?
they
Is that
say
going
that they, like, all these
to the
banks
credit shocks?
pass
Are they truly
stress
behind us,
tests.
or are we still
So
have
why
more to
did they
come? What are
fail?
the
If all the
cumulative
banking system was
impacts of
good, why
monetary
was there
policy, the
issues with
lags? So when
regional
you're less
banks?
certain, and I
What's the
feel
point of
much
stress
less
tests then?
certain about all of those
Like,
things,
come
then you
on.
want to move more
I
slowly.
read a
That's
good
prudent
thread on that.
policy in any
It was
tightening
pretty
cycle, but
sweet. It was pretty sweet.
especially now when we've tightened
And
so rapidly, and it takes a while for the economy to digest those
it
things.
was. I'll have
And
to
I don't
find it,
want
but
to
it was
make
good.
an
It
error
was
on the
really
side of
good.
overdoing it because I'm
All
impatient,
right,
and I don't want
we
to
can
make
finally put the
an error
keyboard back now.
underdoing it because
The little
I
girl has
quickly draw the
decided
conclusion
to
we're
do
finished.
something
So
else.
optionality, data dependence, that's the mantra.
The market thinks one and done. Is that wrong? Is that too excited?
I think the market might be really focused on yesterday's CPI and the slowdown in the labor market and just
Yep,
projecting.
and
I
it's the
can't say
PCE.
because I don't know what they're thinking exactly, but I do absolutely have more optionality. But I have a lot of meetings left in the year, and I have a couple of weeks before the next meeting. So I'm feeling right now like optionality is where we want to be,
Yeah.
and not being declarative.
Finally, can I just ask you, President Daly, about your own district and your own home base, which is San Francisco? More and more
See?
conversations I'm having with business leaders are revolving around the crime statistics, which is widespread in the country, but San Francisco even worse. Them having to make
See,
decisions
it's what I
on whether
mean.
to close up shop. We've seen
I'm
that
like,
in
why?
some instances with Whole Foods, for example. How do you think about what the local economy is doing? A lot of it, I guess, involves return to office and post-pandemic conditions, and what to do about it.
Well, you're absolutely right that San Francisco, the Bay Area, after the pandemic, businesses didn't come back in large numbers, and it's left small business leaders, small business owners rather, closing for a variety of reasons. Some reference crime, others
Or
reference
is it going to
just
come
they don't
when
have the
unemployment
customer
starts to
base
tick up?
returning, so as the pandemic support rolls off, they just feel like there's just not a profitability mechanism here. It really depends on where you are too. It's interesting. Every time I go and I read a newspaper when I'm about some other place, whether it's New York or I'm away, I read about San Francisco. It always is a more extreme version, but I actually work in San Francisco. Our employees are coming to work, and we have lots of businesses open, and I see more and more people returning to the office, more and more people investing in their communities. And I live in Oakland, and that's a thriving area right now. So I think it's a little bit like Mark Twain, rumors of my death are greatly overstated.
So watch here, guys. I'm watching Shop.
Area, which is an attractive area for many reasons, are really overstated.
Sometimes you got to be patient.
We do have challenges ahead, and one of those challenges, and I don't want to beat this horse too much, but one of those challenges is inflation is really hard on small businesses. So you add other things to them, and they shudder and say, I'm out of here, and that's too bad. We need to get this fixed.
Well, we appreciate you taking so much time with us this morning, the wide-ranging conversation. Mary
My
Daly,
pleasure.
President of the San Francisco Fed. Our thanks to Steve Leisman for joining me as well. Steve, thanks.
CFTC charging Celsius. When we come back, KVW's Chief Tom Show is going to join us, talk about the bank set to report tomorrow as the Dow has lost a good portion of its morning gains, up 24 points. Back in a moment. Celsius Network and its founder with fraud and material misrepresentation.
Charlie KR Recorp, COO and President, currently speaking at the Once Again virtual event for AI. Romeo Echo Kilo Romeo. CJC Canopy Growth getting a pop here on some volume now. Charlie Golf Charlie.
First, rated R.
Welcome back. I'm Pippa Stevens with your CNBC News Update. Moments ago, a Pennsylvania jury decided the man who killed 11 people inside of a Pittsburgh synagogue is eligible for the death penalty. The jury reached their verdict in just 2 hours. The killer was convicted last month on 63 federal charges in the October 2018 massacre. Today, a British jury heard from Kevin Spacey for the first time in his sexual assault trial in London. He denied the charges against him and said he was just a big flirt.
We
he also
back.
claimed one of the men accusing him of assault told him he'd withdraw the case if Spacey paid
What's
him.
up, team?
Four men claim the Oscar-winning actor assaulted
What's
them
up,
between
team?
2001 and 2013. Spacey has pleaded not guilty to the 12 charges against him. And LeBron James put retirement rumors to bed at last night's ESPY Awards. The basketball star said he would return for his 21st NBA season, despite hinting at a possible retirement earlier this year. James has said he hopes to play alongside.
Now let's see if this thing can curl itself up. This is a pretty good setup here. We just don't have the volume that we need, but it could step itself in.
Pretty ugly earnings season coming for the big banks. Leslie Picker.
She said Leslie Pisser. That's so funny.
Bank executives have been guiding the market lower.
She said Leslie Pisser. Did you guys hear that? I know you did. She halted.
By 20% on average from the
That's so funny.
laid out just at the start of the year. That's thanks to rising funding costs, banks needing to pay depositors more amid higher for longer rates, and loan growth is slowing. Those dynamics are crunching margins, and of course the environment for deals, both M&A and IPOs, has been basically abysmal. All of these headwinds come at a time where
she's gonna have a smile on her face.
And the direction of the economy is uncertain.
That's why I love CNBC. The one time the one old guy farted, and the girl couldn't even talk because they were just laughing the whole time, and the whole session just got destroyed. He's like, "Brrr!" It's so loud. Oh man.
This is what the trough looks like. So, if that's true, maybe any hints of green shoots from
Let's
the
look.
reports
Let's
and
watch when it goes back to her.
conference calls may help generate renewed investor interest in the group. We'll see tomorrow when three of the big money center banks, JP Morgan, Citi, and Wells Fargo, report. I'll be sitting down exclusively with Citi's CFO, Mark Mason, tomorrow afternoon. Carl.
All right, LP, thanks. Talk
Oh,
soon.
they went to Carl.
To expect as those earnings do kick off tomorrow. We're joined live at Post.
Look, he's got his.
CEO of KBW.
Look.
As always. What is the most
Oh my
important thing to
God.
look for this round?
So I think the first thing is that profits have been declining. We're looking for
KBW
a 7%
CEO.
decline in earnings per share year over year. So we're resetting the earnings estimates because of the historic change in interest rates. So I think that's going to be on the table, and that's probably going to play out in the next couple of quarters. And then the market's watching very closely on credit. We think credit costs from the first to second quarter will be up 20%, but remember, up 20% from zero. So still very benign. And I think the market wants to know, what about credit? And so I think those are the two biggest themes. And then investment banking, just like Kelly just said, which is it's going to be a terrible quarter for investment banking, but we think it's turning, and we actually have been recommending investment banking stocks.
Yeah, I mean,
If you guys are new, I'm over here watching Shopify. I want to see what happens here. I said this. I wonder if this is a failed breakdown or if it needs a little bit more time.
So what it is there are
So
two
it's
things to look
either
at. One is capital markets, which is follow-on equity.
it's
There's a
either
lot of
the
pent-up
breakdown.
demand, especially out of private equity, to sell shares.
Just want to make sure
And so
I
as the stock
am
market's
seeing
been
this
holding in there and
correctly.
rallying, it's almost like sector by sector you've seen the on switch turn on. So that's actually going to be a good quarter. The second thing
Let me
is
see.
banks,
Undo.
investment banks get paid when mergers close, not when they're announced. And so the
Dang
gap
it.
between announcements and closures
I knew
is
that was going to
widening,
happen.
which
I
means we're
wasn't
getting
going
more
to.
announcements, which means you should get more
Wait,
revenue in the
did he?
second half of the year.
What did he
and
say?
that's building.
Coinbase?
So that makes us feel better.
What?
about some of
What
the
the
other
hell's
stuff?
going on?
Frequency,
I know
right now,
Bitcoin
real
was
estate.
ripping. All right, that's a lot of volume, guys. What's going on?
And you can get even
That's a
more
lot of
specific all
volume.
the time. You can say
Coinbase,
it's
Coinbase,
commercial
Coinbase.
office buildings, it's the big buildings, and it's in the cities. And so our commercial real estate research group believes that there's 30% downside to valuations in this cycle, and that we're about halfway through. But there's going to be more write-downs in commercial real estate. We think you'll see it in the Goldman quarter because they have a lot of.
That's
equity
huge
investments.
volume,
They'll
guys,
probably be writing that down.
for
In
Coinbase.
our last interview.
Huge volume.
Who else is exposed?
Well, first of all, one of the stories is how much credit, and there's a whole nother theme, is not in the banking system. Since Dodd-Frank was passed, the banks have lost market share to non-banks. I think you're going to see a lot of it in the non-banks. But the bigger banks tend to have the bigger real estate projects. And so Wells Fargo tomorrow, they've
All right, let's see shop, see if it's getting ready to go now. Yeah, look, it's getting ready to break out. It looks like it doesn't have to.
That's actually a big number. So I think that's going to be part of the topic around this commercial real estate.
Come on, come on, come on, come on, come on,
The
come on, come on.
industries, the lobbying groups have been vocal on capital requirements, saying it's going to hurt access.
If you
to
could,
loans,
guys, like, share,
to borrowers.
give us a like, get the
For the
likes.
industry?
I'm just we're trying to get to 100 subscribers. We, as in me, just no one else. I do it all
The non-banks
here.
are gaining share. And the more expensive you make it to
I need to know what's going on with bank or Coinbase. I need to know. Turkey, you're gonna have to lay down, find yourself a place.
The more a bank's going to want scale.
Do what you gotta do.
Those
I know,
investments
baby.
that they're
I
gonna
know.
want to
Come on,
consolidate.
you gotta hurry up.
It's a very predictable chain of events. And also, I had a chance to testify in front of Congress this quarter. One of the things that I said was there are unintended consequences from overreacting. Silicon Valley and these other banks failed because of liquidity, okay? Not because of capital. I think these higher ratios probably would
Do you
not
guys have the news on
failing.
Coinbase?
And I think if Silicon Valley hadn't failed, maybe Signature and First Republic don't.
Does
Because it was a
anyone
contagion that
have
expanded.
anything?
I believe the first step should be deposit insurance reform, not increasing capital ratios. The FDIC actually laid it all out in a report, and they have a hybrid proposal that I think that's excellent.
We could probably look at
That should
Robinhood.
be the first step, not raising capital ratios, because that's going to have a whole dynamic on the bank non-bank
Did
competition.
you just hear our conversation with Mary Daly?
I did.
So is she right that there wasn't a big supervisory failure here on the part of the Federal Reserve and the San Francisco Fed specifically?
Let's see here.
I believe that there are multiple contributing items when something like that
Yeah,
goes
man.
bad.
What's up, bro?
And what happened was circumstances.
I need
that
to find
happened
out what the hell's going on with
that,
Coinbase right now.
that there would have been opportunities for many participants.
I just
inside the
missed
bank
it.
to be able to make changes. And at the end of the day, the depositors got more nervous about the mark to market on the bonds than anybody else did. And so I think that's ultimately what led to the
Hold on,
pressure
let
of
me-
the bank. And then what we
Notice you
learned
did not
too,
answer.
well, what we also learned is that they had $13 billion of deposits in their top 10 relationships, which is staggering and a number I never would have guessed.
Come on.
So coming off of this, There's going to be less concentration.
So this might be a failed breakdown on Shopify. I may take Shopify again. I don't want to be throwing money at the wall either, though, because there's two different things that could be going on. This could be the start of it, or
Really quick, to the degree that there is consolidation, do you feel like the Goldilocks picture we're getting
right
on
here, look,
mega-cap tech M&A
or,
will
yo,
translate
you
to
son of a,
financial M&A?
I've always thought that you got
like, it could just play out and sit and extend all the way through lunch, and then I could bring this up and bring this over, you know? Like, there's multiple ways we could be looking at this.
The question is, will we have 15 banks that can equally compete? And so these other banks want to come together to compete with the big four banks. They're not allowed to. We'll just have these four banks. Meanwhile, non-banks are continuing to pick up market share. So I think yes, because of the power of it, more diversification of risk.
I guess it was the court case news. I guess there's a court case thing.
One of the big challenges, though, is because of the changes in Washington, it takes twice as long as it did 2.5 years ago to get an answer on a merger application. So there are more obstacles to thinking about that as a strategy.
Yeah, we're getting used to some pretty long windows when things are announced. We'll see what happens in the morning, Tom.
You okay? You sneezing?
Thank you.
You okay?
Tom, and on that note, be sure to tune in to this
And on
show
that note,
tomorrow.
Pisker.
We'll talk to the CFO of Wells Fargo, Mike Santomassimo.
Welcome, Piss.
Right after
That
they
was
report
too
their
funny.
quarterly results.
I'm sorry.
Here
That
at
was
with the
just too
Dow
funny.
Gains, nothing here, up only 35.
That was too funny. Come on. I can't stand that noise. I'm sorry, guys. If it's loud on your end, I apologize. What the hell is the noise coming from? I need a haircut so bad. I'm gonna get one this weekend. I don't have, it's so hard to find time for a lot of stuff. Like to just do anything. It's just time is not on my side. Alright, so I guess there's something going on with court. Maybe Coinbase just got off of probation. Shares of crypto-related stocks are trading higher after U.S. judge ruled Ripple sales do not constitute an offer of investment contracts. I always felt the same way. It's like you're gonna say it's not. I mean, they should also not be taxing it. So if Gary Gensler can say it's not a commodity, it's not anything, but yet how is it that, like, by law, if you're gonna state, if you're gonna tax, son of a bitch, if you're gonna tax capital gains, it has to be something relative to capital gains. So is it or is it not? Like, it just doesn't make any sense to me. I just think it's like a bunch of like just like be professional. Like what is it? If it's not a commodity, if it's not this, and you're not going to consider it anything, you shouldn't tax us. You shouldn't tax people on it. This isn't just a cash grab and just robbing people. Like it's theft. Come on, baby. Let you out.
At Angie.com.
Oh, Lordy.
Getting a news alert today on former Celsius CEO Alexander Mashinsky.
And there was news on Celsius as well.
Hey, Carl, good morning. More details will likely come to light in a DOJ press conference going on. And it's
Oh, look, there was
the noon, but the CEO and
dip
founder
by
of the bankrupt crypto exchange Celsius arrested this morning, facing new charges around the downfall of that company. Federal prosecutors set to unveil several new charges against Alex Mashinsky, the Celsius founder, including misleading investors and market manipulation.
He went after Sam Bankman-Fried too.
With securities and wire fraud and conspiracy to manipulate the price of a cryptocurrency created and managed by the company called the Cell Token. The SEC and CFTC, meanwhile, charged Mashinsky with securities and wire fraud, and the FTC announced a $4.7 billion.
You don't have any laws regarding any of it. There's no. So how is it you're going to charge somebody for breaking the law when you don't have any laws for set? I'm sure they have a little bit. You know.
$12 billion in management and 1.7 million customers as well. It was offering
They're just doing people dirty, man. I'm telling you. I mean, not to say that he didn't do something right or wrong, but the thing that I don't. Hold on, let me. Sorry, I don't mean to talk over.
It said banks are not your friends. CNBC is investigating.
The thing that I personally don't like is they say,
according to internal documents and former employees we spoke to, who accused Celsius of market manipulation and misusing customer funds at the time. We reached out to attorneys for the company and Mashinsky. No word back yet. It is the latest wave of charges we're seeing in the industry after FTX and Binance. Carl, back to you.
They say they try to go, they're going to court, they're doing all this stuff with Sam Bankman-Fried and stuff, so they can give money back to the people. So they can give money back to the people who lost their money. Okay, I got you. Well, I can tell you right now, if they really cared about getting the people their money back, they wouldn't have... Oh, nice, bro. Yeah, that's what's up. They would not have three feds, Bahamas, and then New York picking it up, and then whoever else. Like that, all that's doing is just taking the money. That's just the state, federal government, the Bahamas, all of them, and the lawyers going after a cash grab instead of saying, let's just let the Fed handle it. Let's just have one big court case, and people get their money back. Like that's what's doing right for the community. That's what's doing right for the citizens, which is what they say they do. No, they're just taking the money and spreading it around from themselves. So in what manner are they even different from Sam Bankman-Fried themselves? I mean, come on. Come on. I don't think anybody has really thought about that, because it was like, oh, we're going to pick up the case too. We're going to pick it up, that guy that we just seen from New York. Like, there's not going to be any money left. If there is, it's going to be very little. And then you're going to hear them say, we haven't gotten all the money back, blah, blah, blah. Well, you could have if there wasn't 3 different cases, 20, 30, 40, 50 different lawyers getting, you know, I don't know, the 20, 30 grand a day. Like, getting it, you know, to take on that case. The judge, prosecutor, like all that fun stuff. You know, what would be the right thing to do, which is, in the first place, like, in all honesty, you should just, you got to watch what you do with your money. You know, there's no regulation in that field, and you should know there's no regulation that, you know, do I trust putting my money here? It sucks to have something like this to happen, you know. It just sucks when people take advantage of other people. It's a shame, you know. But if they wanted to do right, they would just say, let's let one person we're going to have one court case, no matter who it is. You know, the lawyers are going to get paid, and then all the rest of the money is going to go back to the individuals whose it was stolen from. Because they're going to say, we don't have the money. We still have X amount of dollars in claims that haven't been received yet. Or, you know, that have been lost or not given back, that just isn't there. No, it could be there. It was just spread around the states, the feds, the Bahamas, the lawyers. Like, so it's just funny. I was just really upset when that man came on from New York and said, we're picking up the case too, because it's a cash grab. That's all it is. And it's citizens that don't, it's some people that may have money, but there's more people that don't have that much money who invested into it, younger people. And they're just, you know, they're digging their hands in his pockets. So it's a shame. And then they're going to send him to jail and do all this and that when they themselves are doing the same exact thing. If you guys could, you know,
Another target, FTC's
Yeah, man, you're right. You're right.
and questioning Congressman Kevin Kiley,
Yep,
pointing
you're
out
absolutely
FTC
right. I like
is
that.
0-4
I like
when
what you
merger
just said there. He
challenges
said,
and why the
Deontay
FTC
said, the
brings those
common
cases to
man is
court.
used as
Listen to that
exit
exchange.
liquidity.
We fight hard when we believe that there is a law violation, and unfortunately, things don't always go our way. But we, make determinations.
But
about
are you
whether
bringing
we're
cases
guilty.
that you expect
Let's
to
see
lose?
here.
Could you repeat
Are
that?
you bringing cases that you expect to lose?
Absolutely not.
Meantime, the FTC in a legal filing last night telling the court it intends to appeal the loss in its case against Microsoft, seeking to block the tech giant from buying Activision. Expecting the FTC to file that full appeal later today, any minute now. Timing could be worse.
Yeah,
for
this is what I
Microsoft,
thought
since
with
it
Shop. It's
agreed
going to
with
need more
Activision
time.
to
I'm not even
close
going to
the
look
deal
at
by
it.
July 18th,
I mean,
and it's currently
today.
under a temporary
Unless it
restraining
starts
order
breaking out.
not to buy Activision
'Cause it's
until
gonna have to do it.
11:59 p.m. tomorrow. So now the question is, can the Ninth Circuit make a decision before that order lifts? And if it can't, will Microsoft go ahead?
Yeah,
and
it's going to
close
just
the deal
consolidate,
anyway?
which is
And
nice.
overseas
Because this
regulators
could
in the
offer us
United Kingdom
a,
yesterday gave
so
Microsoft
let's,
an
I'm
open
going to
challenge
watch
terms of the
Shop
Activision
for
deal, putting its case
this
on pause and
consolidation.
saying it will pick it up.
And then
If
maybe
the new terms
1:30,
don't
2
satisfy.
o'clock,
Now, if Microsoft can't get
we
this
get a
wrapped up by
nice
July
run,
18th,
a rally
they either
into
have
the,
to renegotiate
a rally
terms
into
with
the close. Now
Activision
remember,
or
it's already
abandon
up
the deal and pay a
five,
$3
almost
billion
6%.
break fee.
I don't know what the average ATR is on this.
Coming down to the wire,
I
Carl.
can't
There's a steady diet
believe
of
it's
comments
much
from
more
Steve.
than
Wondering,
2-3%
the court's
on
obviously
average.
the agency. Congress, she's obviously getting a grilling today.
But it would be,
There's
if we
talk
get
about
this, we could get
whether
a
or not
day
there's a
2
rift regarding
continuation and we could
leadership
get a
versus
gap
the
up
staff.
tomorrow.
I'm just trying to think
Is
which
what I'm
organization
really
is
looking
getting
for
whipped.
is a gap up
That's exactly
tomorrow.
right. And to her, if you want to take her
And
point
even
of view on
next
this,
week
look, even though
calls
that
aren't that,
losing, record
they
have
aren't
with
too
merger,
expensive.
They see that as a win because the FTC undercut
So
their,
on average with some
posture in this,
volatility,
Carl, is that look, the laws are antiquated when it comes to this new
38,
era of antitrust, and they're trying to
42.
encourage Congress to change that. That's their view.
All right, Steve, thank you. Steve
Thanks, Sarah.
Kovac, keeping it interesting there with all those deadlines. Wall Street buzzing about Bob Iger today and those comments he made from David's exclusive interview this morning.
so
More
it's
details after the
usually
break.
got like a $4 move. Yeah, we're gonna say roughly a $4 move with decent liquidity. On a big day, it could have anywhere 41, 49, $7, $8. All right, that's all we needed to know. That's all we needed to know. We got a nice bull flag here. So this is why I'm watching it, because we have a nice bull flag. You know, you have a nice rally. Oh, right here, see? So this right here is the move. You know, you could start from right at close. You could start from here. I'm just measuring the move, and as long as it stays up here and consolidates, I'm looking for a move that covers the close to the high of the day today, which is this right here. We take it and we'll put it up at the level even somewhere. Yeah, there you go, right back there, right at VWAP, because that's where it's been hanging out. And it takes me to the gap fill. What's this line? That's the gap fill. So this is why I'm getting confidence on what on putting the trade on. I've got my take profits. I'm going to give it a little time. Not much. I'll give it, you know, I just want to see if I can get a gap up on it. I really do. I want to see if we can get a gap up over this level and then maybe get a small rally in the morning. But there's your gap fill right here. It's not really a gap fill because it, you know, you do have a base here, but this is my target. Putin saying that Ukraine into NATO is a something for Russia. Ain't nobody messing with you, man. Just relax. Like, just stop. It's not the 70s. It's not the 60s. It's not the 80s. Like, just let people fucking live. That's why your country is the way they are. If Russia was Russia, you would have just obliterated her. It just, you know, you wouldn't be struggling fighting the small ass country of Ukraine. It's because of the theft, the innovation that isn't there anymore. You know, controlling people and what they want to do, and it's just, come on, just fall back. Just fall back, Putin. Whether we like or dislike the European Union, we can all have our opinions, but just stop living in the past and some ridiculous. And I know why he doesn't want Ukraine to leave, because he just that was Russia's, you know, that was their money. That's a lot of money that's you know, may not be getting put under the table and put back into the state, you know, country of Russia, between wheat, soil, and all the other shit that they do. So I'm sure he's gonna be bad. That's gonna take 25% of this profit. Just making up a number. So it's a boring day, guys, girls. Let's see here.
Interestingly, that soundbite is actually.
I need to get back on coin. This is what we need to be watching. Sorry, I don't know why I had it on shop. This is where the volume is. This is where we want to be. All right, this is liquidity. This is where we want to be.
Kind of interesting. They couldn't find box office data from 1960. Apparently, that's not readily available. But they think that the impact is actually pretty, as you said, negligible financially on the industry.
Looking for resolution maybe in fourth quarter. We'll see. The judge is in Tahoe. Let's get to the half.
Carl, thank you very much, and welcome everybody to the halftime report. I'm Scott Wapner, live today.
I just want to get my levels on coin.
Celebrity golf event here
all these stocks coming up off the. Look at that beautiful head and shoulders. That's so beautiful. That looks better than Nvidia's reverse head and shoulder. It really does. It's a beautiful chart. Something you can't. I see why it took off. Oh, and like Roblox, like because I wonder if Roblox ended up going. No, it didn't yet. It's trying, but I should have just bought the stock itself. That's what I should have did.
We're higher across the board today. The S&P 500 and the Nasdaq each hitting new 52-week highs, as you see there. Yields, they're down. The 10-year note yield is at 3.79. So, Josh, I'm going to begin with you.
Here we go. We got some money managers on now.
Of course. And how about this headline from Goldman Sachs today? Because I think this sums everything up and where I really want to start the show. For the first time in 23, we're currently being asked by multiple clients.
Oh, it was her, the one I was talking about. That couldn't talk and stuff because of that one guy doing what he did. Like, he just blasted one on live TV, and she was like, she's smirking now. She's always smirking, but
precisely, you know, whether or not it'll close up, down, or indifferent relative to the old high, of course. But I would just point out the most important factor going forward from this point would be increased participation, and we're getting it. And so by that I mean I don't
this
think
is a beautiful chart
Magnificent
pattern.
Seven can carry us to a new high if the rest of the market is not cooperating. On a year-to-date basis, Judge, only 29% of stocks in the S&P 500 are beating the overall index. That is the
And I
lowest
said it
reading
when we got
that
this
we've had
rally.
since
I'm like, wait,
1998.
we just had
That's gotta
Coinbase at
change.
$30-some.
And things are in motion
What a
that
deal
tell me
we
it
were
could change
given,
to
and
the upside.
it wasn't
But
until
we
this
get
thing
that
took
point,
off that I
it's tough to
realized
feel
like what
particularly
an
confident
opportunity
that
it
we're
really
gonna,
was
max
down
out
there.
across the board and get that all-time high.
The buying opportunity
I
that you
think
had.
if you go back and you look at some of the best rallies ever, what most of them have in common is that it started with large cap leadership and ultimately it broadened out, and that broadening out is how you get the multi-year rally that we're looking for. Not just let's go back and kiss the old all-time high from January 22 and then fade away. So the good news is you are starting to get that participation. You're also getting a couple of other things. An end in sight to the rate hikes, a U.S. dollar that's almost 15% off its September 22 highs. That's definitely helping out not only on price, but also on the earnings front. And you continue to get economic surprises to the upside. So that's where we are right now. Things, of course,
Man,
could change.
it's
but if
such
you ask
an
me,
it's
gun to
such a
my
big
head,
area.
is
It's
the new
like
high going to happen? I'm going to say yes also.
neckline
but
for
I'm
this thing is like
qualifying it.
80
I
to
need the rest of
85.
the
It's like a
market
$5
to
range.
continue to catch up to what we've seen in the first half.
I hear you. Makes sense. Shannon, that makes sense to you? And the question is, George,
There goes the
do we
spy.
need it? Yeah. Will we
Spy is
get
going,
it?
guys.
Ultimately, it comes down to that. What's the
Spy
answer?
is going. So
Well, I think
9
one of the
EMA.
things that's
Wait,
driven
I
a lot
gotta
of the
take this
activity
off
that
so
we've
we
seen, and we talked
know
about
for
this a little
sure.
bit earlier in the week, is just the amount of money that has come out of short covering, and I think we're seeing that on a week-over-week basis. Continue
Okay,
to see
shop's
short
still
covering.
sitting
There will be an
sideways.
end in sight to that. There's a diminishing marginal utility, if you will, in terms of short covering on the index at large. But then there's this question, Scott,
Just
of all of
smacked
this
into
money that's on the
resistance.
sidelines in money market funds as well. And I think we've talked a lot about that over the course of the last year in terms of moving that money from money market funds out in duration in bonds on the curve. But what if that actually starts to fuel back into equities? What if this improved economic outlook? We saw PPI today coming in later than expected, which wasn't too much of a surprise. But what if this improved economic outlook actually leads people back into stocks? And I question where they will go, right? Are they going back into active strategies? Are they going into indexing? Because once again, that's kind of the easy play to go right back into an index. But I agree with Josh in that the Magnificent Seven cannot continue to drive this market. The multiples, I believe, are too high, and that earnings will have to really blow it out of the water to justify those. This broadening out not only in large caps, but in other caps.
It might make its second
really
leg
needs to occur if you're going to get more of that money
to
out
get
of the
this
sidelines and into
trend line
stocks
to
rather than into longer duration fixed income.
Weiss, I feel like that tees you up so perfectly because you're the
I'm
kind of
gonna
investor that
say-
Shannon's talking about. Someone who has, for the most part, been in other areas than equities. You haven't really had a ton of exposure. You've increased it and then decreased it here and there. Are you poised to now, get out of some of these other areas that you've been in, deploy more cash into the equity market because you agree with this call today from John Flood at Goldman Sachs that we're actually going to hit a new high, which is,
Yeah, you got to, bro. It's not. Well, I don't know what you're in and whatnot, but yeah, it is. Well, you know what? If you see it, man, and the technicals levels there, just try and like. I don't know, man. There's like trying to like think of like a way to be able to like help you, like even just have like just dwindling your size down.
Markedly increased my exposure.
I took 3 trades today. I was just. I don't think I know. I was green on all of them. I'm just trying to think the one was like break even. I don't know if commissions. I paid commission. I'd have to look.
When you
justifiably so,
I have to get.
right? Is it? I think that's something.
I need to get a.
That we
yes
have
and no.
gone from a
Yes and
I need to
glass
get a
half empty
Coinbase
market to a
account or
glass
like some
half full
kind of
market.
account to trade crypto.
Well, I think it's one of, look, I think what's impacting it and what's driving it is that, repeatedly said, and I'll say it again, you've got a new class of investors that has grown
Yeah,
up their
I
entire
feel-
time
I
in
feel,
the market
though.
basically has been exposed to V-shaped
I feel you.
recoveries. And maybe that's
Like
the right
Coinbase
way
right
to
there.
be, 'cause markets
3-minute
are a
chart,
lot higher
9
now than
EMA.
they were 10,
Watch
20,
the tape.
30 years ago, despite recessions,
See if this
despite
volume gets bigger.
geopolitical
I don't know
issues,
where
et
it's
cetera.
headed.
So just staying the course
Like you
pays
still have
off.
short. So I think that's it for
Last
the. I
year,
mean,
we had a
it's
pretty
up almost
negative
10%.
market. Here we are
And I'm
bouncing
pretty
back.
sure it's just
Not
on
all
this move.
stocks have recovered. As a matter of fact, most haven't from
It's
last year's
huge.
decline.
It's actually
But the
huge.
headlines
It's went
are
$12,
that
$13.
The market has, so because of the weights in the indexes. So look,
Did you guys notice and
let's
see
see.
Palo Alto
I mean, I think
yesterday?
that's
It got
pretty clear,
smacked
despite the Fed going
with
perhaps
that-
2 more times, definitely
with
1 more
that,
time in July. I doubt
Well,
they
you heard
back
Mary
off
Daly,
right?
Microsoft
The move
News.
we've seen lately.
That's huge.
Did you hear Mary Daly
for-
earlier on the
If
network
rates have
within
peaked-
That
the
was
last hour or
almost. It was
so,
like
right?
$25
She says it's too early to
yesterday.
declare victory over
Nah, I
inflation.
don't,
Some
man.
are suggesting
I
the Fed
don't.
should just declare victory now.
I don't. Not yet.
Get it over with. She
Not
said
yet.
2 more
Because
rate hikes sound
I
reasonable
mean,
in her
I didn't know it was going to go from 10,
Right, but the point
and I
is
just
that
didn't
the
really
bond
think
market
about
is
the
telling you rates have
liquidity,
peaked. So if rates have peaked,
like the Fed, what the Fed was doing for it to go all the way up
right,
to
there is
60.
no
So
alternative.
it's
That
been on
market
high.
market
So I kind of,
years ago,
I've been waiting
I
for
think
about
you've already
12.
seen as much money coming
You know, I've been waiting to see if we could get down to that 12 mark. You know, doesn't, we almost got there. It was like 18, I think, 18, 16 it got down to. I'm just waiting. You know, I'm just waiting for it to get there.
Clearly going forward. So who am I as a single person to fight that momentum when I'm seeing both value in certain names and I'm seeing also momentum continuing in fundamentals and others. I think
I did kill it with
for the Microsofts, for the Googles, etc. Because let's see if enterprise spending.
Yeah, what did we get to? We got to 16. Should have, you know, I don't. I figured 10 because a lot of people were talking 10, and I could see why 10. But this 16 makes more sense looking at it. Got this pivot high, your flag here, you know, consolidation, and it's turning this support. It's that's the buying opportunity's been missed. But you could probably get a pullback. So like what's going on here is like this is a beautiful resistance, but I feel like it could start, it just gets its pullback to here again, but it's weird because it's not putting in, it needs to put in a higher over this, so it could just be the chart messing with me being a weekly, you know. Unless it's coming now, unless it's coming soon. We're getting ready to get this breakout.
Airlines. I know we'll talk about that later, so let's not go into it now. But the overarching point that I would make, and this is circling back to your earlier question, is yeah, I think we will hit the new all-time high sometime in the next 6 to 12 months. Before then, though, Scott, I mean, let's respect the 17% year-to-date rally.
Oh yeah, for sure, man. For sure, I will. Definitely. Yeah, just buying the dip.
Fear of missing out. For a guy like me, and you know my positioning, I am not going
to. Yeah, just buying the dip. I got you. You're exactly right. That's what I'm thinking to myself. Literally, I'm thinking that right now, going over this chart. Like as I'm going over this chart, I'm like, wow, what a buying opportunity that was.
That are really performing well right now, I think they've got a lot of room to run, and I don't want to get out of them by being too cute. On the flip side, if the FANG stocks where I'm underweight come down, that gives me an opportunity to add. So this is a time for a person like me to stay the course. I will say this to be helpful to others. If you're worried about that 5 to 6% pullback that maybe happens, maybe doesn't, I don't have a crystal ball. The VIX is awfully low right now if you want to buy some insurance.
Yeah, no, that's a good point you make. Hey, Weiss, so let's get to some of these moves because you've been in and out of the queues.
The VIX is awfully low because
making these bets.
I think we're not going to have a step out of our earnings. I'm going to go use the bathroom. I'll be right back.
That and the cues. So what view does that express?
Yeah, I added to a couple things as well. So on BABA, and I've been negative on BABA, and you know was shorter for a long period of time. Covered it unfortunately at about 150. But the way I look at it this way is that the stock's cheap, so it's about 11 times earnings. The Chinese government, Xi in particular, is now embracing technology. They put the fights behind them. They settled with ants, which was front and center. They brought back Joe Tsai to run BABA. And BABA is exposed to the entire economy, whether it's cloud, whether it's e-commerce, just pick your poison, financial, fintech with ant. So with them embracing, with the Chinese government embracing technology and perhaps taking a look at the U.S. playbook and seeing what's helped drive our economy, which are big cap tech and innovation, et cetera, I think this company's going to do well going forward. So the stimulus is just, you know, mind-boggling. So they need to do more. They will do more. I also added to Freeport. I was on the bubble, actually. Should I sell Freeport? Should I hold on to it because of the Chinese economy? But the bad economy, to me, is behind us and moving forward.
Perfect that was, man.
So that's why I bought BABA.
This is like pre-planned.
And the risks are delisting.
Yeah, man. I'll see you, bro. You too, man. Stay safe, bro. Oh, I'm going to.
That's it. Chinese government's come
all
out in
right.
the past
Yeah.
work. Then they came out and said this does work. So I don't think anything.
I'll see you, bro. You stay safe. I will. Thanks for telling me about that, man. I appreciate that.
Invading Ukraine, I don't think that's going to happen either. And despite what we're hearing in the headlines, you know, I do believe that there's a nice undercurrent with Yellen and Blinken going to China of trying to improve relations. So at this point, I believe the downside's minimal, and that's got pretty significant upside.
Are you looking at other Chinese names as well?
I'm not really. I don't really, I may, but I'm not really. I may look at the index overall, but right now, BABA is, if the others work, BABA's going to work. I've been short a bunch of others in the past, like Billy and PDD, but I haven't been short those for months and months.
Let's spend some time talking about the
Qs.
Yeah, go ahead, Weiss.
So in terms of the Qs, I got long a little bit and stayed long. Actually, I was long a lot, then took some off, but went long into the inflation number, CPI, because it was clear to everybody that numbers were going to be low. So in this half-full market, I thought they'd move higher. So I kept that position on, actually added to it after the print, and have stayed long through the PPI print because I think it would follow the same way. The Qs are always, I wouldn't say always temporary, but generally are as a trade. So right now, I'm staying there.
We've learned that.
To stay there. Yep.
We've learned that with you.
And that's the way they should be used. Yeah. I mean, there's nothing wrong with it.
No, I'm not saying there is, but that's the way you've been playing.
No.
Yeah, I know. Let me move on.
Exactly.
I mean, I do want to note there's an upgrade of Meta today, which, by the way, hits a new 52-week high. Gets upgraded to outperform at TD Cowen. Target goes to 345. But let's talk about the banks, if we could. Josh, I'm going to begin with you. Obviously on deck reporting tomorrow is JP Morgan, Citi, and Wells. Third or fourth best sector today. People really looking for some life out of this group because year to date the stocks have underperformed the broader market. JP Morgan, Josh, is really the only one that's done anything. Double-digit gainer, up 11%.
Look at this thing, guys.
Today that the story's about
$15 to 50, so it's up over. Wow.
I think the story's been good for a long time. It's a 10 multiple. So
I wonder what this does to the overall market. This is
JP Morgan, unless you think there's like this imminent deterioration in the domestic economy, which I suppose is possible. It just doesn't look plausible with the data that we're getting. So I know people get upset about that because they had assumed that the economy would be way worse by now, given all of the tightening the Fed has done. But that's just not what has ended up materializing. The consumer continuing to spend, being willing to continue to spend, and the lack of serious delinquencies or bankruptcies or anything like that occurring from all these rate hikes, I think puts the banks in a good position in the second half. If things get worse, the stock will suffer. But, again, can we wait for that to show up? So until that does show up,
I'll be back in a couple minutes. If anybody's here, I'm just gonna go wash my face real quick, throw some water on my face, get some face wash, and kind of just freshen up a little bit. Just make probably make a sandwich or something. I'm gonna be 12:17. I kind of don't want to go anywhere with this Coinbase, but I missed this entry here, so I'm not really too worried about it. You could still see a gap up tomorrow. I want to see how this plays out during lunch, what it does in the afternoon, and then see if we get that gap up tomorrow. See if we get the gap up. This thing could start to squeeze.
It's roughly the same number of deals, but the difference is the reception. So all of the $100 million plus IPOs, if you look at an average,
but yeah, I'll be right back in like, give me like 10, 15 minutes.
The market is receptive to deals. You're going to get more deals in the second half. JP Morgan's going to make money. And then you think about the banking franchise and the money that's shifted over away from some of the weaker, the more weakly capitalized regionals. So there's just a lot of good things happening there. And I think the stock can continue to work its way higher.
You know what, Jimmy, it's interesting. Josh lays out the reasons why these stocks can do well, but even JP Morgan itself, in terms of their outlook for earnings, isn't that optimistic. We remain cautious on the large banks due to regulatory headwinds near term and longer term, due to uncertainty over the economy, implications for softer hard landing, high prices, et cetera. So, I mean, even the bank strategists, analysts, those who look at this space and the stocks don't seem to be all that optimistic about where these stocks are going to go, at least in the near term.
Yeah, well, okay, but I think that also emblemizes why these stocks have underperformed for so long. The biggest one being fear of a recession, credit losses, lower earnings, the ongoing discussion about net interest margins, fears of solvency or at least earnings declines at the regional banks. And the point I'm making here is I really do strongly think that that's all priced into these stocks. What's not priced still is an economic recovery. What's not priced still is credit losses that don't get anywhere near as bad as people are worried about, or a steepening yield curve, or as Josh was pointing out amongst other things, an uptick in the deal calendar. Let me summarize it by saying it this way. These stocks are amazingly cheap. And, you know, you don't buy stocks just because they're cheap. But if I look at Citigroup as one of my holdings, along with JP Morgan and Goldman Sachs, this is a company that last quarter, they've already announced, bought back $1 billion worth of shares. That's against a market cap of $92 billion. So they have the cash flow, not only for a 4.3% dividend yield, but to buy back an annualized rate of 4% plus of their shares outstanding. To have those sorts of cash flows at these prices is really a buying opportunity. Whatever the analysts are accurate. What they're not talking about is what's priced into the stocks.
Guys, we're going to leave it there for the moment. I want you to stay with us. We are live from the American Century Championship here in beautiful Lake Tahoe. Look at this backdrop. Can you do any better than that? And one of the celebrities teeing off today is Ray Romano. He is going to join us next. We'll get his thoughts on that looming actor strike, his pivot to directing, and of course, much more. We're back in Tahoe in 2.
Good boy.
All right, we are back at the American Century Championship here in gorgeous Lake Tahoe. This event has been owned and operated and produced by NBC Sports for the past 34 years, and we're excited to let you know that this week, NBC Sports and American Century Investments announced they're extending that partnership for the next 6 years. So we're not going anywhere, and we're excited about all of that. One of the celebrities who rarely misses this tournament is the actor and now director, Ray Romano. He's with us live. It's good to see you. Thank you for being here.
My pleasure.
How many years have you been coming here?
This is number 18. 18th year, yes.
You told me last night you can't sleep. You're so amped up when you come out here to get out here and play.
Yeah, the adrenaline starts flowing, and there's 2 weeks of the year. This one and Pebble Beach. You know, I play in the Pro-Am.
Yeah.
And in each one of them, it's like Christmas morning every morning. You know, you can't sleep at night. You can't wait to get up, and I want to sleep. I woke up, even for this, I woke up at 5 to 5 this morning. Yeah.
Join the club. Join the club. Let's talk some business. What in the world's going on in Hollywood? Now it looks like the actors are going to strike along with the writers.
Yeah, it's not official yet, I think, right?
Not yet, but
yeah.
it certainly seems to be heading in that direction.
Yeah, that's what I hear. I mean, look, the world is changing, the technology is changing. I think it was inevitable to just get what's fair, and let's see what happens, you know. I was out there with the writers last week walking, because I'm in that one. I'm in the act. I'm gonna get my steps in, I think, in the next couple of weeks.
You need more hands to carry the picket signs. I mean, it's the first time you had an industry-wide shutdown in some 63 years.
Yeah.
Both the writers and the actors at the same time. So it's been a while.
Did it happen? Yeah.
When you say technology's changing, are you talking about streaming and the way that the business itself is changing? Well, how are you thinking about all that?
The streaming, you know, using your voice, using your image, your likeness, you know, with all the new AI stuff and all that. I mean, no one was prepared for it. No one, you know, all the contracts before that, no one knew this was coming. So, you know, they just have to get up to date to protect the actor, protect the writer.
I mean, as a creator of content, as an actor, do you care where your content necessarily goes at the outset? Do you prefer a movie to be in a theater? Do you care if it's on streaming? Do you follow all of the different streaming platforms?
Yeah, well, I mean, I did just direct my first movie.
That's right.
And I wanted it in the theaters. And I always, listen, I want people to see it. So now it's now available on pay-per-view and all that, and it will be streaming in October. But I wanted, part of the joy of it, of making it, is sharing it with a room full of strangers even, and that communal feeling in a theater where we're all from different lives, and yet we're enjoying this, we're bonding over this, we're laughing or crying at the same thing. I mean, that's the magic of the theater. So I never want that to go away. Now, having said that, if people can see it on streaming, I want that too. But the payoff for me when directing it and I wrote it and I acted in it was those times we went and we sat in a theater and screened it with a full audience. That was really the reward of all this work for me.
What was it like directing your first film? Actually telling actors, you know, what to do. Do you have a new respect for the process itself?
I originally wasn't going to do it, and my agent talked me into it because it's a I wrote the script with my writing partner, Mark Stegman, and it's a personal story. It's taken stuff from my life, and he told me, why don't you direct it? And I said, no way, I've never directed anything. All the shows I've been on, I've never directed. And he finally talked me into it, and when I went to prep for the movie, you know, you go about 9 weeks before. We went to New York where we were filming, and we have to prep. You do 9 weeks of prep, and day 3 of prep, I'm not making this up, I had to go to my cardiologist and get on the treadmill because I was getting chest pains. I was so stressed out by it. Yeah, it ended up being fine. But that ended up being 9 weeks of that, leading up to day 1. Once I started, it was fun. Once I started, there was no time for that. And yes, I do respect I've always respected directors.
Sure, but when you're the one behind the camera, you know, you're ultimately the one responsible for how the product is going to look at the end of the day.
Yeah, it's me. I wrote it, directed it, started it. There's no one else to blame but me.
Does it still amaze you how popular Everybody Loves Raymond remains to this day, how popular of a character you were on that show? It's one of those iconic shows that just doesn't come around every day.
Well, it amazes me only because I hate myself So, but I have to give it up to the actors and the writers. You know, now that I'm removed from it, I hadn't watched an episode in maybe 15 years.
Is that right?
Yes, but lately, and I'm older now, so I'm reaching that point, you know, that late midlife, early end of life crisis, and I started watching them again, and I appreciate it more now, and not so much what I do. I cringe at when I see myself, but the other actors, how great they were in the writing, how great it was, and it just appeals because it's family and it's universal. It doesn't matter where you're from. Everybody kind of feels and goes through the same stuff.
Sure.
Yeah.
We have one of our panelists today is named Josh Brown, and he has a question for you regarding the program. Ray Romano, Josh Brown, it's yours.
Uh-oh. I'm a little frightened.
Hey, Ray, I have a comment and a question. The comment is, Everybody Loves Raymond took place in Lynbrook. I grew up in Merrick. The exterior shot of your house on the show was 135 Margaret Boulevard. I grew up in 124 Margaret Boulevard in Merrick. So I'll throw that out to you. Here's my question. You have one night, you're back in Forest Hills. You have one night, you're going to take out a bunch of people for dinner. They're not from Queens. They don't know where to go. You could pick only one of these two choices. Don Pepe's in Ozone Park or Parkside in Corona. Where are you going and why?
That's a tough one because I've been to both of those. And
I know that.
And I don't want to. This is a Sophie's choice, man. You can't make me make this choice. I'm going to get in trouble no matter where. We're going to go to Don Pepe's. We're going to go to one for dinner and one for dessert. That's what we're going to do.
All right. You got out of it.
Yeah.
All right. We'll take it.
1 o'clock today. You're hitting golf balls, right?
1 o'clock today. It's the the corporate round, and then tomorrow the tournament
Real thing.
starts. Yeah.
All right. We wish you the best. I think you've come in 60th place twice. History is not supposed to repeat itself.
I'm a numbers man. I came in. My best I've ever done is 57th. I want to crack that. I want to crack 50 at some point.
All right, we'll be watching for you. Thanks so much.
All right, thank you.
All right, that's Ray Romano joining us here. By the way, be sure to catch NBC's coverage of the American Century Championship Friday through Sunday on NBC, the Golf Channel, and Peacock as well. Plus, coming up on July 25th, you can join me in Los Angeles as CNBC and Boardroom team up to host Game Plan. It's a high-powered event bringing together the most influential leaders across the sports landscape. For details, go to cnbcevents.com/gameplan. We're excited about that. Up next, Bob Iger on the record. Our David Faber speaking exclusively with the Disney CEO. He is going to join us next with those highlights. We're back right here in Tahoe on the Half in 2 minutes.
4 Eastern.
All right, we take a look at Disney shares today, by the way, which are getting a little bit of a bump, which takes us out to Sun Valley today in Idaho. That's where our David Faber spoke exclusively with Disney CEO Bob Iger earlier today. David, it's good to see you. Another beautiful backdrop. I don't know if it beats this one, but it's pretty darn good.
It's a lot nicer than our two desks next to each other at the New York Stock Exchange at this time, typically, Scott, right?
Yes,
That's
it is.
for sure. Yeah, I know. I don't know. I might even give you the edge a little bit. You got a little more snow in that background. But thank you, Scott. We did have a wide-ranging interview this morning with Bob Iger, really about the future of the company that he's now going to be running until the end of 2026. One area that I thought worth focusing on is the future of ESPN, because it was one of a number of different areas in which he frankly made news. It was almost 8 years ago, it was August of 2015, in which during a earnings conference call, the company first brought up subscriber losses at ESPN. Well, here we are 8 years later, and of course the future of that key property is really in question in terms of what's the strategy. And Iger made it clear they're open to joint ventures, equity partnerships, and of course the expectation in the not too distant future that they will move it to a streaming service. Take a listen.
We have a great brand, we've had a great business, and we want to stay in that business. That said, we're going to be open-minded there too, not necessarily about spinning ESPN off, but about looking for strategic partners that could either help us with distribution or content, but we want to stay in the sports business.
What would a strategic partner look like with distribution or content then for ESPN?
Well, I think you could, again, I'm not going to get too detailed about it, but we're bullish about sports in general as a media property. There is an inevitability, by the way, you raised it, to taking ESPN and direct to consumer.
Yeah.
We haven't said when, but we do know that it will happen.
Of course, the economics there become a key. When do you get to the point where you can ensure you're going to have, or hope you have enough subscribers who are willing to pay you a monthly fee, Scott, that is going to equal or not exceed your sub fees currently coming from the cable providers? Advertising, obviously, also an important component of that. Now, there'll be a lot of speculation about, well, who would that potential partner be? Could it be Apple, for which he did a video recently when they introduced their new product? Will it be somebody else? That conversation begins, but clearly they are open to a lot of potential alternatives, although not parting with ESPN. Scott?
Thought it was interesting, too, David, on that very topic of Mr. Iger saying, you know, that when he got there, TV in general, broadcast TV or linear TV, proved to be even worse than he thought it was when he came back in the door.
And he thought it was pretty darn bad. I think that goes to show just exactly what they're seeing in terms of linear subscriber declines. We've talked about it for years. We know it's ongoing, but there had been an expectation, frankly, that it would slow. Instead, I think it has sped up. Now, they're in a quiet period. He couldn't speak to specifics of the quarter that they recently closed, but he made it clear that it is incredibly challenging, and it is informing his decision-making about what he's going to do both with ESPN, but even more so, as he made very clear, with ABC and the linear cable networks they have, which he basically said are not core to Disney any longer. Scott, I should add, we're going to recap the interview later on our in our prime time at 8 o'clock tonight. We'll have the full interview with Iger once again for our viewers.
Oh, great. We're excited to hear that. Let me ask you one more question and take it to the issue of succession. Sure. Obviously, he says now he's staying on for 2 more years than originally expected. You can't help but look at this story, David, and wonder, why is it apparently so difficult to find a CEO to take over for Bob Iger?
It's a great question, and I don't have an answer for you, other than apparently it is very difficult to find a CEO to take over for Bob Iger. The board thought that it had their man in Bob Chapek. That did not go the way they'd anticipated at all, not for the board and not for Mr. Chapek as well. It was somewhat unexpected, perhaps, that they would then turn to Mr. Iger again instead of perhaps having somebody else in mind. He has what he would point to as a strong team behind him, though it's clear, Scott, I think, that there's not an expectation on the board that any of the 3 individuals, all of whom were here watching this morning live, are ready to take the helm of the company. But you're right, there does seem to be sort of a shortage of perhaps very senior talent out there that is willing to take this on, and or some of the other companies. You think about, the other leadership as well at some of the others. But it's a good point. It's the key responsibility of a board, and they've kind of pushed it down the road for another couple of years, as you say.
Yeah, it's been a can that's been kicked, and they'll kick it a little more. David, appreciate it so much. I'll see you back at your desk, I guess, next week.
You got it, buddy. Yeah.
All right, man.
Soon.
Yep. That's David Faber out in Sun Valley. Jimmy, quickly, you own Disney. So I don't know. Are you surprised at what you got from Bob Iger today, including the announcement of another 2 years?
I'm actually not surprised. I kind of felt this was inevitable, just simply because the task that he has at hand and that he has willingly taken on is longer than 18 months. It just is. And I think he's got the energy to complete it. So I'm glad that this confirms what I kind of thought was going to happen. It's good news to me, Scott.
All right, good stuff. Coming up, we have your earnings playbook. We're going to talk to Jim about Delta's record quarter. Halftime is back right after this. We welcome you back with our chart of the day. It is Delta posting record quarterly earnings, hiking its full-year outlook. There's the stock up 1.5%. Jimmy, you're the man on this one. Year to date, it's astonishing, really, up 45%.
It's a cyclical stock, Scott, and what we have seen in the last couple of months is that the cycle is very much intact, much more so than was feared at the beginning of the year. So the stock is just catching up to where the economic fundamentals are. I do want to make one comment, just continuing on here. You know, Ed Bastian at the Investor Day 2 weeks ago gave a lot of indications that he thinks it's no longer a cyclical stock, that there's a secular story here. I personally find that hard to believe. I'm not buying into that. But at the same time, we're really, I think, about halfway through where this stock needs to go in terms of reflecting the cycle that is a lot better than people expected. Stock was soft yesterday too, Scott, and that was on fears that ticket price declines, as evidenced in the CPI, would hurt earnings. Obviously, that's not the case. Demand is strong. It looks like it's going to remain strong for quite some time. So I'm going to ride this for now, but this is not a permanent stock.
Man, if only our resident airline stock hater, Steve Weiss, had these stocks at the beginning of the year. Weiss? I had to give Jim a little something there.
I've traded them in the past. I agree with Jim. These aren't sustainable. And the difference between what we're seeing there and the economy overall is that when you book your airfares, you're booking them a long time in advance. So to the extent that part of the economy, we've seen it in numbers, is under siege still from inflation and wages not keeping up with it, I just don't think you see the same momentum. Additionally, airlines has always brought on additional capacity, and you will see that. But right now, they look fine. They're not cheap. This is what they normally trade at. So you can't put a market multiple on them.
No, they've had a great year thus far. United Airlines up better than 45%, but 45% seems to be around the benchmark. Guys, we'll take a quick break. When we come back, right here live at the American Century Championship, NFL Hall of Famer Tim Brown. We're going to talk to the Heisman winner turned CEO when halftime comes back.
I'm gonna make. I am back. I'm gonna make some coffee. Take me 2 seconds. I just had to wash my face and stuff, brush my teeth real quick, freshen up. Shop, guys. Shopify looks like on the 5-minute chart. Look at this. Looks like it's getting ready to take off. If it's going to, it's going to do it here very, very, very soon. All right. I just feel it. Doesn't mean it will. It just if I had to say this thing was going to do something, it's going to do it soon. If I had to take a guess. If I had to take a gander. I mean, obviously, you could just hang back down at that tail there. But I feel like it's going to go. I feel like she's going to blow. So, is this the break, or does it come back down and make a lower low? If it gives us more time, that's fine. The longer it gives us, let it be. That means that's just building. It's going to have more strength. You know. The longer it takes, if it starts to do this at like 2:33, you know, 2:30 and the 3 o'clock, and starts the rally, I'll feel a lot better about it because it'll consolidate, and there's people that are short will start getting nervous that this is not coming down. All right, so the longer it stays up here, the better chance we have of a pop higher. And what I'm looking for is a gap up on it. All right, it had a small gap up today with this huge run, bear flag. See if we can break out, possibly break out. Curl. I'll show you in this. This is what I'm going to be looking for, at least.
Welcome back to Lake Tahoe live
Come
from
on.
the American Century Championship.
Yeah, I just want to see if we break out of this pennant and then
Tim Brown is with us. He's the CEO
pull back to test it.
Transportation company 81 Logistics.
Pull back to test it.
Minority-owned businesses in that space. Welcome.
So for now, we're going to keep it on. I mean, it's following the trend line, so maybe it revisits down here. And we want to see these tails. We've gotten, this is the,
Well, fortunately,
you know what?
for me,
Hold
when
on.
I got
How about
into
this?
in 1989,
I might be,
the Raiders doctors actually came to me and say, "Look, man, this is really bad. You may have 3 or 4
might be
more
seeing it
years,
wrong.
with your knee. We recommend you use this
No.
great Notre Dame education." I mean, that's really what they told me. And I was like,
yeah,
"What are you
so
guys talking about? I'm
it's one of the
23 years
two.
old." But you know, in the back of my mind, I realized that's why I gone to.
I still think it's this wider one.
So we started.
But if it pulls back and holds this here, then it's going to make its move. But I think it's this one here. I think it's this one.
It was a great experience for us. So yeah.
I'm not going to get over like thinking about it too much because you don't need to. You don't need to think about these pennants like overthinking and everything and trying to be exact.
So I'm playing golf with a buddy who is in the industry, and he told me that there was a problem because of the shortage of minorities being in the business. And so we took a look and was shocked that in 2016.
Yeah, I don't really like that. I like this one better. I got.
Who could supply fuel coast to coast for any of these companies? So we thought we would take. I had just gone into the NFL Hall of Fame. You know, I knew a Dennis Nash and Keenan Advantage.
All right,
Group,
I gotta get
a transporting company who was
something to eat. So I'm just gonna make something real quick. I'm gonna heat something up, and I'll be right back. It's 12:50. Just when I get back, I'm gonna look around. Obviously, I'm gonna be in crypto. I'm gonna be Coinbase, all of them. You know.
Transporting fuels and trying supply also. You know, so getting supply from these big Fortune 500 companies and moving it to the.
Let's see here.
Did I read correctly that 7-Eleven is a customer of yours?
7-Eleven to join us as far as being one of our suppliers.
Dallas-based company. I remember that from my days down there as well. Are you keeping up then on fuel prices and what the price of oil is and gasoline and all that kind of stuff? Are you into that?
I have no choice but to be into it, right? I mean, certainly, I have to be Tim Brown. I have to come and do things of this nature. I have to travel. But certainly, I get the reports every day, fuel news and all that kind of stuff.
Fuel news. That's what you've gone to reading, from Sports Illustrated to Fuel News.
Exactly.
Let me ask you some football stuff. Raiders now obviously in Vegas. You happy with that?
I'm happy with the Raiders being in Vegas. Yeah, of course, I wanted them to stay in Oakland, but it became very clear that was not going to happen. And so the franchise needs to have a home, and I was glad that Vegas, stepped up. And,
it's a good thing I got out of Roadblocks because there was something about it I didn't like. I loved the entry. It had high volume here. We bought the dip here with the 9 EMA, and which was right here with 38.2 Fibonacci. All that fun stuff. VWAP, 9 EMA, 32 Fib. So it was a good buying point. But I just something told me that it was just like I got the run, so I took my money. That's all it was. Is I took my money. 38.2 Fib right here is where we were buying. You had your 90. See, it's a little different now because I didn't have pre-market up, so it's going to change the moving averages. It's going to change how they look and where they're at. Price and time. You add more time, it's going to price in more volume if it's the VWAP. There's more things to price in. That's why it's different.
That's the problem. I mean, there's no stopping him because whatever you do,
I feel like Shop wants to get ready and go. Like for some weird reason, looking at it, it feels like it wants to break out. Feels like it wants to break out.
Beat them 14-10. You have to put up 30 points if you're going to beat that team.
Yeah. What do you make of the changes that have taken place in the NFL? It's obviously more favorable, I think, to the offenses. The way they protect the quarterbacks today, or receivers have more of an opportunity to get open and get the kind of yardage that you're accustomed to. Do you like that style of football?
Yeah, I mean, look, it'd been great if it was like that for us.
You did okay no matter what it was.
I had a former coach to tell me, Tim, I think you guys would have caught about 200 passes a year if you were playing in today's football, because it was a much more physical. The first 5 yards for us was very physical because the defense's goal at that particular point was to stop you inside that 5 yards. If they could stop you there, then but that's not the case anymore. You're free to run off the line of scrimmage. So it's a different game, man. It's enjoyable, and I think that's what the NFL is shooting for. So, but I don't have any qualms about it.
All right. Appreciate it very much.
Hey, thank you, sir.
Wish you well on the golf course out here, of course, and even more importantly, as your role as CEO of 81 Logistics. All right, that's Tim Brown, the NFL Hall of Famer, joining us right here in Tahoe. Be sure to check out NBC's coverage of the American Century Championship. It's Friday through Sunday on NBC, the Golf Channel, and of course Peacock as well. We'll come back right after this break. We'll do final trades next.
What's up? Give it up for that man. He got he's a football player, and now he went, like, I guess from what I wasn't really paying attention to it, but he ended up going to people and getting some money and starting a logistics thing, I guess, and he's doing a damn thing. That's what's up, man. That's what's up. That's awesome. And it's not easy, you know. It's easy to sit there and you know and say how you know how cool it is, or not even really how cool it is, but like, you know, watching a man that's done a lot of things and still doing, you know, still living his best life. It's still stressful, you know. It's still stressful. I'm sure he has trouble. There's been sleepless nights just running a business. It's not easy, you know. But, you know, those are the people that I kind of look at where it's like, you know, you want to really just live life to the fullest that you can. You want to get the most out of your one shot, you know. And I guess he was saying he went to people that had money, you know, he went to venture capitalists and did what he did. And, you know, an email, just send an email, you know. You never know what that stuff will get you guys. Did we just break up and out of this pennant and are testing the top side and should start to see some volume come in here? I'm really curious if this thing starts to pop. Alright, I'm going to go get I'm going to have this. I'm going to be watching this while I'm doing what I'm doing, because I feel like this has been broken. It'll play itself out. Sometimes this stuff takes like a day and you'll see it and you'll be like, oh, okay. You know what I mean? Like if I were to draw it from here to there and then it puts in a new high to fill it out. Well, all we can do is see, you know. I think the probability of it not going down, and it's, you know, holding up, it's above VWAP. It's holding strong up here, so I could expect it to try and give us a little bit of a run. This is a tough area, double top here. Prior on the daily is a resistance level, which it's going to be tough for it to break through the first time, but it tried twice today. So let's see if it tries to break through it again, and if it can. And if it does it happen overnight where there isn't, you know, there isn't a brick wall of a full market of sellers?
I hope you will join me at 3 o'clock Eastern today for the closing bell. We'll be live again right out here in Lake Tahoe. SNL's Colin Jost is going to be with me. We'll have some fun with that, obviously. The American Century CIO, Rich Weiss, as well. Talk about the markets there. Greg Branch, too. You know how negative he's been on the market, so we'll see what he thinks now as this rally rolls on. Shan, real quick from you. What are you looking for? Banks tomorrow and then turning to next week?
For banks, we've seen a lot of support in the credit markets, Scott, since the end of March. Big banks and regional banks have raised about $50 billion in credit.
I feel like she's always token. Like, look at her laughing and smiling. What's so funny? She always has a smirk.
Sales coming down as inflation is coming down. How are these companies going to?
I know why she was laughing at one time.
That lift on the top line.
All right, quickly, final trade. Give me a name, guys. Josh, you first, then Steve, then Jim.
Like.
Toast, new 52-week high.
Baba.
There was just news on Baba. Something just happened with Baba. I'm looking at it right now.
3 o'clock, closing bell. The exchange is now.
You know, we don't have the mountains. We don't have Idaho. We'll come up with something today. Scott, thank you and welcome to The Exchange. I'm Kelly Evans, and here's what's ahead this hour. 4 days in a row of gains for the major averages. The Dow almost at a 52-week high after the S&P and NASDAQ both hit theirs. All of this thanks to cooling inflation. Our investment strategist says we are in a Goldilocks moment for stocks. She'll tell us why she's sticking with big tech and where else she's putting money to work. Meanwhile, is Bidenomics responsible for keeping the economy hotter and rates higher for longer? Former Dallas Fed President Robert Kaplan says the Federal Reserve needs to call this out more. He'll join us momentarily to discuss. Plus, Disney CEO Bob Iger hinting at some major changes that could be coming to the company now that he'll be at the helm through 2026. The highlights of his interview this morning, and our experts weigh in on what that could mean for the media industry as a whole. But first, of course, today's market action with Mr. Chu.
Peaks, green, just like we saw out in Lake Tahoe with Scott Wapner's shot there. I do remember that. I fondly remember Lake Tahoe. And those particular views, they are as good as they are in real life, by the way, on TV. So anyway, Kelly, to your point about the markets, we are green across the board and just about near session highs right now. The S&P 500 now just sitting right below, almost on top of the 4,500 mark. So we've gained almost 100 points or so over the course of the last week here, up about 2/3 of 1%. To give you an idea of where the S&P has been on an intraday basis, at the highs of the session, up about 30 points, up about 17 at the lows. So very much a positive day so far. The Dow Industrial is up about 1/10 of 1%, 51 points to the upside, 34,399. The composite index, the real outperformer here, up north of 1%, almost 1.25%, 171 points for the NASDAQ. 14,091 the last trade there. That technology trade really standing out in today's session so far. Interest rates also a big part of that discussion. I want to say it's 4 days in a row that we've seen the 10-year benchmark U.S. Treasury note yield fall in terms of value, but rise in terms of price for that overall government bond. We're falling again, 3.78% for the benchmark 10-year note yield. The 2-year note yield falls to 4.63%, and you can kind of see that 2-year, 10-year difference narrows just a little bit more. Remember, we were north of 100 basis points or 1% negative. Now we're just about 80.
Oh, I didn't have my mic on. I was saying I think I may be getting close to buying shop.
Three stocks that have really kicked off.
I don't like to do stuff in the afternoon, but I will.
Talk about the big banks as the ones that really kind of kick things off in earnest. But we got 3 S&P 500 companies.
If I do, I would let you guys know.
Today because of earnings, and generally all 3 are up. Delta, PepsiCo, ConAgra. Delta gets a check mark up here because it's a new 52-week high. Better than expected results, boost to their full-year forecast. PepsiCo, better than expected results, boost to its forecast. ConAgra Brands, a more mixed picture. Profits better, revenues a slight miss, but again, a raising of their annual forecast. So 3 stocks, 2 consumer, 1 airline, all consumer focused, all up on the day. We'll see if that bodes well for the rest of earnings season. Kel, I'll send things back over to you.
All right, Don, thank you very much. Well, first it was consumer prices. Now another gauge shows inflationary pressures cooling. Producer prices rising just 0.1% last month, and that's raising hopes that the Fed rate hikes may soon be over. But here's what San Francisco Fed President Mary Daly had to say about that earlier on Squawk on the Street.
It's really too early to say that we've declare victory on inflation. This month of data is very positive. I hope it's part of a downward trend in inflation, but I am in a wait and see mode on that because I remain resolute to bring inflation down to 2%.
Why?
Well, my next guest agrees the Fed is not done.
Do you guys know it wasn't until 1979 that we started using and made a deal with China that we were going to get a lot of our goods made and, you know, imported from there? So this idea of the 70s and being sticky, I seriously think, I don't know why they're using the 70s. We didn't depend on China like we did today. So it's like there was energy, there was oil being held, like it was a whole different situation. And I feel like everything is kind of like gotten better with a little bit of time and with them opening back up. So, you know, and look, see if she goes.
Government enabled because there tend to be public-private partnerships. Is they not only affect construction spending, but
there's one we called out for you guys. If you guys didn't get it, we were just talking about shop. We want to see it and see if it can retest. I'm personally looking for the I want to see if I can get myself an overnight gap up tomorrow.
At a local level, it's having a very material effect on these local labor markets and service sector markets.
Yeah, and I think in the labor market in particular right now, when we look at the claims number this morning, and things haven't really, they slowed last year. We kind of saw the implosion of a lot of the high value, tech stuff and things like that. But the resilience of the rest of the economy is the most notable thing about this year. You made an interesting point the other day that some of the localities have to spend this money before the end of 2024. And I guess the question is, do we want all this to happen? Because if you looked at it glass half full, you'd say, wow, the Fed's getting everything it wanted. Inflation's coming down and the economy's still strong. And isn't this, is Bidenomics helping, or is it, counteracting what the Fed is trying to do?
It is, in my opinion, it's blunting to some extent what the Fed is trying to do. It's not all bad because it means, I think without these projects, we might have otherwise been in a recession by now. So the economy stayed resilient. Many of these projects are good projects. These battery manufacturing projects are necessary. But many local officials are telling me, we've had this project that we've been looking at for 30 years, and because of the government money, it was marginal until we got the government money. And so all I'd recommend is I think it means if I were on the FOMC, I'd be leaning toward one more rate increase, although I'd have an open mind going to the meeting. But I would be urging, if I were at the FOMC, I'd be urging the Fed to do a lot more work in understanding not only what's been announced, but what's the forward pipeline. Because if this money were to dry up in the out years, I think you'll see these rate increases have a lot more teeth than it looks like they have right now.
And Chair Powell, he was asked about this at the last press conference. He kind of downplayed the impact.
He did.
And we always know there's a reluctance to kind of weigh in on what the administration is doing.
And I think he said it was immaterial, although it's helping construction. And maybe at a high level it looks that way, but I think this feeds right into the wheelhouse of the Fed. You got 12 reserve banks in these local markets that I go to. It's having an impact anything other than immaterial.
Yeah.
And
Look
I'm
at
hearing
the local papers. I mean, again, I grew up outside of Syracuse. The Micron plant up there, $20 billion. It's all they talk about. We've talked about some of the Midwest locations. Look at what's happening in Arizona. This is absolutely driving the narrative in a lot of these economies.
It is. And I don't think it's going to change the action for the Fed in the next meeting, but there'll be a point at which they're going to have to decide, should we really pause for an indefinite period? And I think you've got to understand what the forward pipeline is, because I think there's a lot more coming. We're not done on Inflation Reduction Act projects, Infrastructure Act projects. Even since I talked to you just 4 or 6 weeks ago, there have been a whole series of new announcements since you and I spoke about it.
Wow.
And I just think it would behoove all of us just to get a better grip on what the forward pipeline is.
Before I ask you more about the forward outlook, let's pause. Bring in Rick Santelli. We just had a 30-year bond auction, top of the hour. It sounds like it didn't go well, Rick.
It did not go well, but then again, we've had a very large rally pushing yields down, and it's sort of like catching a knife.
There are many, including myself, who believe interest rates have peaked, who believe recession or not, you can still stay long stocks. But all of that seems to evaporate when you see this type of a market where interest rates are falling. If you look at a 30-year bond yield today, they're down 4 basis points, but they're hovering well below 4%. 3.91 was the auction yield, and that was for 18 billion 30-year bonds. The when-issued market was 2 basis points below that. So lower yield, higher price, and higher yield, lower price. 391 versus 389 when-issued market. Doesn't take a rocket scientist to see that it wasn't aggressive bidding by the investors. All the metrics were actually pretty good. I'll pick out one notable. If you look at the direct bidders, 20.1, that's the best of 23. Dealers taking a little under 11%, that's good. 10 auction average is 11%. But the tailing gives it a dog plus, D plus, and I was being generous there. But there's something to learn, Kelly, from this auction, that no matter how much investors believe interest rates have peaked, they still don't seem quite daring enough to buy it down at these levels, at least not in an auction. Back to you.
Another border collie of sorts. Rick, thanks. Let me turn back to Robert Kaplan. So kind of where do you think rates are going from here then, based on what now looks like a little bit more buoyant view of the economy and at least another Fed hike, maybe more?
I think you could see the Fed, from Fed funds to the 10-year, get even a little more inverted in that many sectors that are economically sensitive and interest rate sensitive are slowing. Many of these enabled projects we just talked about really aren't sensitive to economic conditions or to interest rates. And so my guess is you're going to continue to have an inverted curve. And this is why I've been cautious about many more rate increases, because I think they tend to disproportionately hurt banks that are very sensitive to this, small business who tend to borrow at the Fed funds rate. They don't really affect big businesses much because they borrow along the curve. And so I'm a little nervous about what this is doing to the balance of power between big business and small business.
That's a great point, and one that will take a couple of years to answer, I think, although we are about to get some earnings in the next few weeks. Can I ask a bigger picture question, too, about the impact? We talked about all of these projects. We're building, chips, and we're building batteries and all of these things here in the U.S. that might typically have been offshored. And while that's great for national security and great for our labor market right now, is it all fundamentally kind of unproductive in the longer run? Does it make sense? Sort of like, does the efficiency of the economy, because we're doing less globalization and all the rest of it, does it suffer in the long run?
We knew that the energy transition was going to be expensive. And so this, in the bright side, will speed it along. I'll tell you what worries me more than anything is I think the number one determinant of our future is educational attainment. Well, of our young people, and all the reports show, if anything, it's been deteriorating.
Right, post-COVID, the numbers look terrible.
And I think even in the last year, and my only concern is with all this spending, I don't think education has been prioritized enough. And so I think many of these projects will be good in the long run, but you need an educated workforce. And I would love to see us reprioritize or increase the priority of educational attainment, 0 to 5, the whole ecosystem, skills training, secondary education. Yeah. And I think we've let that lag a bit.
Yeah, but just real quickly on this, do you throw money at the problem? How do you fix it?
Well, teacher salaries is part of it, full day versus half day pre-K, child care that's affordable. Listen, GDP...
These are not the talking points I was expecting.
No.
Former head of the Dallas Fed.
And we've spent a lot of time on this in my career and locally around the country. But GDP growth is growth in the workforce and growth in productivity. Some of this infrastructure spending, I feel it will help, but you need an educated workforce, and I don't think we're prioritizing that enough.
Listen, amen. Robert Kaplan, thank you so much. Appreciate your time today. As I mentioned, former president of the Dallas Fed. Speaking of those bank earnings, the whole season really does kick off in earnest tomorrow morning. We'll hear from J.P. Morgan, Citi, and Wells Fargo before the bell. There you can see the whole landscape. J.P. Morgan, usually kind of the tone setter for everybody. Then into next week, more results start to trickle out. We get Morgan Stanley on Tuesday, Bank of America as well. A couple of the smaller players. We get the beleaguered regionals all throughout the week, as you can see there with BNY and PNC on Tuesday, kind of kicking things off. For the setup here, let's welcome back Jenny Montgomery Scott's Chris Marinac. It's a good sign if we haven't seen Chris in a couple of months, I think, along with our very own Leslie Picker. Leslie, let's start with you and the expectations for some of the biggies.
Hey, Kelly, yeah, this is shaping up to be a pretty tough quarter, even for the largest of banks out there. Bank executives have been guiding the market lower, and analysts have been just slashing their earnings estimates left and right. The street has taken down their Q2 projections for the Big Six by 20% on average from the estimates they had laid out just at the start of the year, just 6 months ago. That's thanks to rising funding costs, banks needing to pay depositors more amid higher for longer rates, and loan growth is slowing. So those dynamics are crunching margins. And the environment for deals, of course, with both M&A and IPOs has been abysmal. All of these headwinds come at a time where bank regulations are quickly changing. The direction of the economy is uncertain, so banks are likely to hold on to their capital rather than giving it back through buybacks and putting away reserves to protect against those risks. Much of this already priced into bank stocks, though, with valuations well below historical averages. KBW says, quote, "This is what the trough looks like." If that's true, any hints of green shoots from the reports and conference calls may help generate renewed investor interest in the group. But we'll see tomorrow. As you mentioned, three of the big money center banks, that's JP Morgan, Citi, and Wells Fargo, they report. I'll be sitting down exclusively with Citi's CFO, Mark Mason, tomorrow on this very show.
Looking forward to that, Leslie. And then in terms of expectations for Morgan Stanley and Goldman, how does that differ? We know the trading environment has been more difficult. You know, capital markets have been a little bit quieter.
Oh, yeah. Trading environment has been very difficult. There's a lot of uncertainty in terms of the direction of where the economy going. That plays a role in just a muted trading environment overall. And then the regulatory environment for deal making also has people kind of sitting on ice. The pipeline is a little thin when it comes to deal making. And of course, you book revenue during the quarter when deals close. So even though you've seen several announcements during the quarter that look promising, those won't be booked as revenue during this quarter. That takes place when those deals actually close. A little bit of green shoots in the IPO market as well. Debt capital markets are seeing green shoots. But again, it's all about when that revenue actually gets booked. And so most analysts in the market are expecting to see a huge drop off in investment banking during the quarter.
All right, Leslie, thank you. Appreciate it. Chris, we turn to you. You're expecting relatively good things for the regional banks, it sounds like.
Well, good things from a perspective of the banks making money and tangible book value and tangible capital rising. I do think Leslie's on the right track. I think it's going to be a tough quarter from a margin and cost of funds. There's a big reset going on, Kelly, for sure. We think that most banks are going to see higher loan loss provisions, so earnings misses most likely happen because of those two factors. But the reality is the market's looking way beyond the second quarter prints. They're looking into third and fourth quarter, where deposit costs continue to rise, but the banks are getting ahead of the problems they have. And what's interesting to me is that we have seen deposits very much stabilize, only down about 0.5% on the Fed data from the end of June through the end of March. And so that's a win. It's happening because banks are paying up for funds. And so we are resetting the cost all around the street on funding, and that's going to come through on margins on the bad side. The flip side will be the loan yields will continue to get better. And I think particularly heading into year end, you'll see a lot more new loans done at 7.5%, 8+% yields. And that's very bullish. So I think margins have an opportunity to stabilize. And we may even see a few portfolios on securities get restructured in Q3. And that's going to help as well in terms of the margin not getting a whole lot worse than what we're going to see in the second and third quarter.
I'm glad you mentioned the loan loss provisions. You know, speaking with one of the most successful regional bank heads, now retired a couple of months ago, and even as all the markets and everyone on the street is all excited about, how great everything looks right now, he was saying he's more cautious. I asked him if he agreed with Sheila Bair that the regional banks are a buy, and he said he wasn't so sure that we hadn't seen the credit cycle turn yet. And to him, it's just a matter of time, and it might not be now, and it might not even be for the rest of this year, but there is a sense that that event is still kind of out there.
Oh, that's 100% accurate. I mean, this is a cycle just like the weather changes. And as we go into 24 and 25, you will see defaults in the industry. Defaults will be a lot worse for office real estate. We all know that and are anticipating that. The time for banks to build reserves is now, to set aside those funds and prepare for the charge-offs that come. I don't think the losses will be that bad because we have a lot less leverage. Leverage is typically 60% on the go backwards basis, and the new loans today are done increasingly at 50% or even less. So credit is scarce. That means the price of credit should go up. And ultimately, I think the credit quality, while it will have bumps and bruises along the way, and we have to reserve for that, it's going to be a lot less than it was 15 years ago, thanks to less leverage and better terms than we had back in 2008, 9, and 10.
Do you agree with the sense that there's going to be a lot of regional bank consolidation, and should we expect this earnings season to be some kind of catalyst for that?
I doubt that we're going to see much consolidation. I think it's really hard for the Fed examiners to approve deals.
There was new ATVI activists and
most likely not this year. I think you may see 1 or 2 deals done next year. But
I don't know which one's going to move off of that, if it's Microsoft or whatever, MSFT. Don't know if it will move. The news was, yeah, U.S. Court Appeals. Wait, this is old news. Why is it coming across the wire?
Do new loans at better terms and better spreads. So that's the play at the moment, and I think a lot of the negativity has been overdone, and I think we're going to look at some better green shoots second half of the year, and still a very stable banking system that is, better funded, better priced, and I think increasingly better reserved.
I am going to cover some charts. I got some coffee brewing.
It'll be fun to watch that throughout earnings season. Chris,
Shop is still just hanging out, consolidating.
Channel surfing. Bob Iger telling our own David Faber that Disney could sell off its television assets, saying they're no longer core to the business, while ESPN is core but may need a partner. We'll discuss. Plus, cleared for takeoff. Delta Airlines reporting a record second quarter thanks to strong international demand and cheaper fuel.
Oh, that's
United
Alcoa.
and American follow suit. And as we hit to break, here's a quick look at
If you guys have any stocks you guys are looking at or want to look up, throw them in the chat. See what we can't find as far. See if we can't come across something that's got momentum. And I mean, obviously Coinbase, crypto stocks.
This is The Exchange on CNBC.
You guys see that? Wow. You don't usually see that. Look how perfect that is. There we go. There we go. I feel like that's the
Goldman Sachs picking a bit lower to 2681.
Yeah, they were saying this morning that Goldman Sachs was never the type to give guidance and all that stuff and wouldn't let them know what they're doing, and they did it for the first time. Told them that they were going to pretty much the way it came off, they said that they pretty much like what was the word? Like they overpromised and under delivered, I guess is. Low volume type of day. Oh man, this low volatility is getting brutal.
Welcome back to The Exchange. Bob Iger will now have through 2026 to lead Disney at a pivotal time for the company. He acknowledged the challenges and made some headlines on the future of linear TV in his exclusive interview with David Faber today. Here's what Iger had to say.
That they may not be core to Disney, yeah. Now there's clearly creativity and content that they create that is core to Disney, but the distribution model, the business model that forms the underpinning of that business and that has delivered great profits over the years is definitely broken. And we have to call it like it is.
Well, my next guest says the challenges Iger faces are, quote, pretty monumental. And he wrote the book Disney Wars. For joining me for more is Jim Stewart, columnist at the New York Times and a CNBC contributor, along with our very own Alex Sherman, CNBC.com's media reporter. Alex, let me quickly start with you. So much to say about this. What are the immediate implications of him putting some of these balls in the air?
I mean, Bob Iger has resisted this, honestly, for years. He put together this company. He came from ABC. So the idea now that he's finally publicly saying, look, we may need to move off the ABC group, the ABC network, some of the linear cable channels, find a strategic partner potentially to take a stake in ESPN. These are big changes. They are in line with more recent comments Bob Iger made when he was not the CEO or chairman. He had spoken publicly a couple times and basically alluded to the fact that the traditional linear TV model is dying. He said today, you just heard him, the distribution model is broken. But, you know, analysts, investors, and frankly, people at Disney have pushed him to make bigger changes in this world for years. And he's resisted in part because he has, he was a part of the fabric that brought these assets together. So this is a big deal that he's saying this today. That's a great point, Jim. The idea that he, spent his first tenure building, I think this is how Alex phrased it earlier, building the company, adding all of these components, and now he has to dismantle a lot of things, it sounds like.
Yeah, I mean, I think Alex is absolutely right. People have been pushing for this for years when, by the way, they could have gotten a lot more money for these assets. But nevertheless, the idea that the linear networks, that the ABC network, the Disney Channel, then ESPN is not core to Disney is startling when you look back at the decades that linear TV produced the lion's share of Disney's revenue and profits. So this is a really big change. And that model is broken. He's absolutely right about that. What they're going to do about it, I don't envy him. He's got a lot of challenges on his plate.
Yeah. What do you think, Jim? We could talk about Disney. Maybe some of it's a little self-inflicted, but this is a really critical time for media as a whole to figure out, okay, we kind of knew the distribution or the model of the last 20 years. What does the next 20 years look like?
Yeah, I think, I don't fault Iger personally for this. I mean, all these companies are dealing with these same monumental structural issues, but, streaming was supposed to be moving in and would gradually supplant the old models. And then, okay, you lose a little money in the beginning in streaming, then it was going to be, really profitable and you could kind of make that transition. Well, that is just not happening. Investors have run out of patience with the billions of dollars that are being lost on streaming. And now you have, the strikes going on, the cost pressures going up, the insane spending war with deep-pocketed rivals like Netflix, Amazon, and Apple. So you're not getting the profitability out of streaming. And meanwhile, the cable model is deteriorating, as Iger said, faster than even he ever dreamt was possible. So they're in a really, really hard situation. I assume they are going to have to just double down on streaming, but that's going to mean, spending a lot, and investors are going to have to go through a pretty long trek through the desert if indeed, we finally get to the promised land where streaming actually makes money.
You sound so bearish, and you're right, Jim. I mean, when you put it that way, he does have these monumental challenges, Alex. So I'll ask you, does this imply, more media consolidation within the industry? Does this imply big tech really only has the pockets to fund the kind of streaming investment that Jim's talking about and to continue to pay up for these sports rights? I mean, again, he alluded to this potential partner for ESPN.
I mean, challenge number one is you can say, okay, we want to move off some of these legacy assets, but what does that functionally mean? Because if you're going to sell them, then you need a buyer. And there's no clear buyer here for a lot of dying traditional cable networks. I mean, it's possible that, Lionsgate and Starz are moving off each other. I know that the CEO of Starz, Jeff Hirsch, is potentially interested in rolling up some of these legacy media cable networks. So that could be one outlet. Private equity could be another outlet potentially that could take on some of these assets. But if there isn't a buyer, it may be a situation where Disney just has to spin some of these things out and then simply wait and figure out if there's some strategy that comes along, where they can at least move forward with a leaner company. Of course, the big end game is, are we entering some world here where Disney becomes a leaner company and theoretically could become an acquisition target for one of the big tech companies? I mean, that, right? Everyone loves to speculate, oh, Apple will buy Disney. Well, Apple's never wanted any of these legacy cable networks. But if you came up with a Disney, maybe that didn't have the legacy cable networks, maybe one day that could be something that's more enticing for a big tech company.
Jim, quick last word.
Well, yeah, I don't think it's an accident. He made this announcement at Sun Valley, where all the media brokers are out there, and I'm sure they're all running the numbers on this. But again, Alex mentioned Apple. That is the dream partner for Disney. I mean, at least Disney's dream partner. I don't know if it's Apple's dream partner. Apple has shown some interest in sports. They're behind Amazon and Netflix. They have the pockets to fund all this, and they have a long relationship with Disney. So there is a lot of talk, speculation, maybe dreaming about a Disney Apple combination of some kind.
Although that's not tangible enough now to help the stock trading around $90 as it continues a tough period. Gentlemen, thank you both today. We appreciate it. Jim Stewart and Alex Sherman. And a quick programming note, if you missed that exclusive interview with Bob Iger this morning that David Faber had, don't worry. We will have an encore presentation of the full interview at 8 p.m. Eastern tonight. Coming up, ExxonMobil acquiring carbon capture firm Denbury in an all-stock deal valued at nearly $5 billion. It's to further its clean energy transition, but look at Denbury's shares. Not only are Exxon shares lower, but so are Denbury's. We'll dig into why. And as we head to break, take a look at the Dow heat map with Salesforce at a 52-week high and Cisco leading the way today, while Chevron and Walgreens are your biggest laggards. We're back after this.
Welcome back to The Exchange. I'm Courtney Reagan. Here's your news update at this hour. It's wheels up for President Biden. He's on his way home after a one-day meeting with Nordic leaders in Helsinki and the NATO summit in Lithuania before that. The president was in Helsinki today to welcome Finland to NATO and talk about financing agreements, Sweden's NATO bid, and Finland's support of Ukraine. Finland, the newest NATO member, shares a border with Russia and applied for membership after Moscow invaded Ukraine last year. Well, the mystery of who brought cocaine into the White House remains unsolved. A Secret Service investigation determined there is not sufficient forensic or video evidence to identify the culprit. Officials say they did not detect any DNA on the bag of cocaine despite tests at 2 federal labs. The White House says it is now reviewing those findings. And North Korea's state media just released this footage appearing to show the country's latest test launch of its intercontinental ballistic missile. According to reports, the missile is designed to strike mainland United States. Today, in a show of strength following that launch, the U.S. conducted military exercises over the Korean peninsula. Kelly, back over to you.
All right, Courtney, thanks. Still ahead, a Goldilocks moment for stocks. Signs of inflation cooling, a potential end to the Fed hiking rates, and the economy holding off a recession for now. We'll speak with a strategist who thinks this market is just right for investors. The Exchange will be right back.
All right, Tesla breaking out there, guys. Just got back in time from getting. We got our range here. We gotta. We know we can get here. That's a trade. That's $2 trade, $1.50 trade. Hold up. Hold up. Hey. All my dude thinking we sold. We don't. Play. I knew it. I knew this was gonna happen, guys. I felt it in my bones. Gotta get to the 279. It can get there. I feel like it can get there. Shit, man, that thing has been going since this morning. These contracts might be already way too much. Way too much. Come on. So I'm gonna look at the contracts and see what all we got going on. And if I'll probably end up trying to make a play if it seems reasonable.
Straight day of gains now after the June PPI came in cooler than expected, and weekly jobless claims were better last week. And my next guest says the market can stay in this Goldilocks moment. Anastasia.
Everybody has their different ways.
Amoroso is a managing director and chief investment strategist at iCapital. It's great to see you again.
Great to see you, Kelly.
So, okay.
I was gonna say that's my girl. I could tell by Anastasia and her voice.
But can it? This is what I was talking to Joe
The
about.
women
Can it last?
of
How
CNBC.
much longer can it last?
Yeah.
What's it going to take?
I mean, I think it can. And I know a lot of, people who might be slightly negative on the market cite the positioning, which is now maybe a little bit extended, or the sentiment, which is super bullish and super buoyant. But the thing is, you need a catalyst to decide, to kind of derail that. And unless and until we have that catalyst, I think the momentum is to the upside. So when I think about the catalyst, I mean, I actually think it's a positive one, which is, the fact that we got a 3 handle on inflation, how great is that? And there's so much to like in that inflation report. The fact that the Fed now is likely going to maybe hike another, 25 basis points, and they're likely to pause after that. 5.5%, we can deal with that. We can work with that pause. And then we have the economy, that is cooling. Maybe it's a little bit slower, but it's certainly not recessionary. And, another stat that I think maybe flew a little bit under the cover of the inflation report yesterday was real wage growth for the consumers is up 1.2% year over year. So we went from negative real wage growth to now positive wage growth. So all of that supports the economy, and
there goes shop.
You know, one thing I wonder about is, so because last June was like the highest CPI print, 9.1%, this one has an easier comp, let's call it.
Yeah.
In the next 6 months, we're going to start to see the readings drift back up again. Are they really going to be able to pause or want to pause in an environment where we've gone, I don't know exactly what the expectations, from 3 to maybe over 4% CPI again?
So first of all, it's not a definite that we're going to see those readings drift back up again. It's contingent on what inflation does on a month-over-month
Is it
basis.
just me,
So
or does it
right,
feel like
if
Friday?
month-to-month inflation
I feel
goes
like I'm
back,
playing
rising
weeklies
0.5%,
today.
0.7% or
Why do I
higher,
keep
you're
thinking it's
absolutely
Friday?
right, we're going to see those year-over-year numbers pop. But if month-over-month readings stay in this 0.1, 0.2, or maybe 0% range, which we saw for some of the core metrics, then if prices stay stable, we are actually on pace.
It's so
towards
weird.
2%
I still feel like
inflation,
it's-
at least on the headline, by the end of the year. So it all depends on the monthly pace of change here. And, look, even if we rise a little bit in terms of inflation, the fact that there's now this gap that's opened up where the Fed funds rate is 5.5%, I'm being presumptuous about, the meeting in July. And if inflation is 3, that's a lot of delta. That means that real rates are actually now positive, and they're going to get more positive even if the Fed just stays pat.
Right, which is interesting as well, because it would kind of mean a tightening, of conditions, even if they do nothing. But the market seems to be taking that totally in stride. Let's talk about valuation for just a second.
Yeah.
So one of the points Michael Kantrowitz made this morning at Piper Sandler is that maybe we're at about a 19 forward PE right now, which is at the upper end, excluding kind of bubble areas of what the market really has ever been able to sustainably trade at.
Right.
So make the case for a 19 times multiple on a market where you go, okay, obviously big tech is so overweighted, the NASDAQ is literally rebalancing. Like, at some point here, are we going to see some kind of re-rate? And I don't know what the catalyst is for that, but can we stay up at 19 times?
Look, 19 times, you're right. Maybe historically this would have been extended, but historically, did you have big tech with, really good margins and infotech with really good margins account for 27% of the S&P 500? The answer is no. And so if you look at some of the big tech companies, and again, software and semiconductors, infotech margin is double what it is for the S&P 500, and it's such an important weight. I think that's partially what's propping up this valuation. And if you exclude big tech, then the S&P multiple is actually right in line with its 10-year average and 15-year average. So I really don't have much problem with that valuation, as long as the economy is not in a recession. Of course, this is a very stretched multiple of 19x if we're talking about a recessionary scenario. But if we're not, then I think it's fully justified.
You also like the banks, maybe the big banks, to clarify some of the alternatives. Why?
Yeah. So I've come around to banks, to liking banks again. And, after the regional banking crisis, the view was I don't want to touch the sector because we needed to get through some of the deposit outflows and the uncertainty. But, I'm certainly coming around to some of the larger banks. And, of course, they start to report tomorrow. But a lot of the headwinds are now well telegraphed and well known. We know that the funding
For the
costs are
two
gonna
people that
rise.
are
We
here
know that the
watching,
net interest margins are gonna shrink.
I'm
We know
going to
that
show y'all
lending is
something
gonna
about
be
these
a little bit
banks.
slower,
Look at this
and
chart.
Of course, there's commercial real estate issues. But for the big banks in particular, I like the potential for the pickup in capital markets activity. If you look through, for example, announced M&A volumes, they have not yet transactions that have been executed, but they're up quarter over quarter. Announcements are up. If you look at high yield issuance, it's up. If you look at the IPO market, it's actually kind of coming
again,
back to life, especially in the United States. So when you start adding all that up, by the way, I do think there's more to that pickup in activity in the second half. That bodes well for the biggest banks. It also bodes well for some of the alternative asset managers because, they've done the deals, they're waiting for the exit. The exit window, the IPO window has been completely shut, but to extend that opens back up again, that could be some pretty nice upside.
If there's a note of caution I see in your work lately, it's really more around, for instance, consumer staples. Why is that? Is that a valuation concern, or just they can't look at Pepsi this morning? That was all pricing pretty much, and I think it was 13%.
Yeah. I mean, look, consumer staples, as long as the overall market is going up, consumer staples will do fine. But it's certainly not the sector that I love because, first of all, there's no margin in consumer staples. If I look at the S&P 500, consumer staples has among the thinnest margins. So if anything goes wrong incrementally, I think that suffers. The other thing is, if we're not in a recessionary environment, I don't have to hide in staples. Consumers don't have to hide. Consumers are going to go out and spend, on airline tickets, for example. So I don't necessarily see a whole lot of, defensive upside to
She's
that.
so smart.
And then there's the valuation, because at some point coming early into the year, this was the crowded trade. People were hiding in utilities, consumer staples. So as a result, the valuations of these defensives are pretty elevated. So
And it all makes sense. It all adds up to it's been a very good year for the market overall and for tech, and maybe it can keep going. Anastasia, thanks so much. We appreciate it. Anastasia Amoroso. Still ahead, ExxonMobil, speaking of deals, announcing they'll acquire carbon sequestration company Denbury for nearly $5 billion. Shares of Exxon are down about 2%, not uncommon for an acquirer, but Denbury is also falling despite the premium price tag. What could be behind the drop? That's next. And before we head to break, check out the online retail ETF iBuy. It's actually on pace for its best week since January, getting a boost from Amazon and that Prime Day effect. Apparently, day one was their biggest sales day ever, and enough to offset the dip in component Carvana, the worst performer with a nearly 5% drop today on a downgrade to underperform at JP Morgan. They slapped on a $10 price target. It's at 37 right now. Warning shares have once again disconnected from the fundamentals. Carvana, though, still up more than 20% for the week. We're back after this.
Feels like AMD wants to roll over, doesn't it? Just looking at it from like right here. Don't it feel like it's just like, I'm not going up. So, it might start to go up now, but let me see if I can put up 15-minute chart. I mean, I know I can. I wonder what this looks like with this. It hasn't been tough to figure out, but we were killing AMD. We were killing AMD just last week. Even earlier in the week, we were like, hey, 110.50, we're a buyer. 115.50, we're a seller. As simple as that. A lot of these moves have been happening overnight in pre-market, which is, I'm starting to notice that. Like even the upside to the S&Ps are happening, during after hours, literally. So, I've been keeping that in mind. Here we go. Let's see. See, look at that. It's just been straight up, straight up. And that's the thing. This market will leave you in the dust. It'll just go and go and go and go. Like, look, there's nothing pre-market and after hours. They're just buying it. They're just buying the dip, buying the dip, buying the dip. So, what are you gonna do? I know that I don't want to look back in August, September and say, and the SPY be at 470, 475, 480, working on all-time highs, and I'm sitting here with my thumb in my hand or something or whatever you call it. You guys know what I'm talking about. So I don't want to be I don't want to get caught slipping. I'm not getting caught slipping, so my ass is going long until I got a reason to go short. Until I see something, hear something, feel something. You know. I mean, we got here last year. Why can't we get there again? We're going to 462. Fuck it. That's where we headed. Hop in the back. We're going to 462. If y'all want to come to 462, hop on in. Let's go.
Effectively doubled the population of electric vehicles on the road today with the amount of CO2 that we are sequestering. So if you think about 100 million tons, that's 20 times that. So that's, you know, you can think about it in different terms, but that's a lot of emissions being sequestered. In fact, that would be the largest step reduction in CO2 emissions that we've seen anywhere in the world.
Interestingly, Denbury investors don't seem as jazzed about the deal. Shares of both companies are lower by about 2%. Dan Pickering, founder of Pickering Energy Partners, tells us the deal is only a small premium, and it's notably below where Denbury traded when this takeover was first rumored. That's why we're not seeing a bigger price action, and it's likely driving some sellers. Still ahead, shares of Delta are edging higher after posting record earnings and revenue. CEO Ed Bastian staying positive on demand, but with shares up more than 45% this year, is it time to take profits? We'll discuss that next.
It's a variable, a symbol of flexibility, solving for the needs of today's investors, finding opportunities across asset classes, investing to sustain growth ahead of the unknown. That's the power of M.
IC Pro starts working instantly with 2 max strength pain relievers. So you can rise from pain like a pro. Icy Hot Pro.
The first time your sales reached 100K with GoDaddy was also the first time your profits left you speechless. At the counter or on the go, save 20% with the lowest transaction fees and keep more of what you make. Start saving today at GoDaddy.com.
From Sun Valley, David Faber's news-making interview with Disney CEO Bob Iger.
Is the business sort of more challenged than when you returned?
The challenges are greater than I had anticipated.
Bob Iger in Sun Valley, tonight, 8 Eastern.
Why is everyone talking about Navage and nasal irrigation?
I am one who suffers from chronic sinus infection.
You need to clean that crap out of your nose.
Navage is simple. Your nose is the body's air filter, but it's not perfect. Navage is a drug-free way to help flush out allergens, mucus, and germs using powered suction. Join nearly 3 million Navage users so you can breathe better, sleep deeper, snore less, and stay healthier.
I love this thing.
It's nice to breathe.
Navage. Clean nose, healthy life.
I'm Mr. Wonderful, and I'm Chef Wonderful. I recently introduced the ERC program to Chef Wonderful here, which is a program created towards small businesses like mine for retaining their employees during the pandemic. Well done, and most of this money is still available. If there's one thing Wonderfuls never do, it's leave money on the table. Chihuahua, this guy is smart. Go to wondertrust.com now to see if you're eligible for this cash. Nice hat.
Welcome back to The Exchange. If there's any indication the travel boom is up and running, take a look at Delta Airlines, up about 1.5% today after beating the street forecast on earnings and raising its full-year earnings guidance. CEO Ed Bastian telling CNBC this morning he's remaining bullish on consumer demand and points out the corporate travel path is still in recovery due to office vacancies. Here's what he had to say.
It's not that people are afraid to fly or corporates are using virtual, it's that the offices aren't open. And as the offices continue to open, I think we'll see some steady improvement there.
My next guest has been flagging Delta's strength for some time. So what does it tell us about results from United and American next week, and is it sustainable? Let's bring in Helene Becker, Managing Director and Senior Research Analyst at Cowen Group. Helene, welcome.
Hi, Kelly.
After Delta has re-rated the way that it has, how much upside is still left, do you think?
So we think we're in early innings. So we think there's a lot of upside. Historically, the stocks have sold at 8 to 10 times forward earnings. So they guided today, for an example, to $6 to $7. Our 2023 estimate is $6.70. But to make the math easy, 7 times 8 is 56. 7 times 10 is 70. So you can see where there's still upside in the stock price.
Sure. And a lot of people are arguing that maybe this can go back to, the strong trends we saw before the pandemic hit, at least for Delta, maybe for some others. How many other carriers would you put in the same stratosphere right now?
Yeah, I think that your earlier point of American and United reporting next week, I would put them in the same class because really, Kelly, what we're seeing is the shift away from domestic to international. People tend to forget that a year ago, we had to test to come back to the U.S. until mid-June. And by then, summer vacation plans were set. Most people plan their summer vacation between mid-March and mid-May, and they weren't going to change those plans. And so we think of summer of 21 and 22 as domestic travel. 23, 24 is going to be international travel, and you see that with significantly higher fares. And, as a result, we are focused on the international carriers.
Yes. So those, you would include United and American as those with decent exposure there versus I can imagine, some of the more regionals here in the U.S. that don't really have that feature.
Exactly so. Some of the ultra low cost airlines, like we have market perform rated on companies like JetBlue and Spirit, but they do fly to some close in international markets, including Mexico, the Caribbean, Northern South America. I just think that this year the shift is to Europe. Europe seems to be very, very crowded. and I'm hearing stories of lots of lines and so on. And we think then next summer we'll shift to Asia Pacific. And so I think that we're seeing this trend to more travel, longer duration trips, lasting further into the season. So instead of that cliff after Labor Day going into October, especially when you can work from anywhere. And I think that trend is going to continue for some time. And for a company like Delta, there's a really good opportunity here because they're 60-40 domestic international. And as they get bigger in international markets with their joint ventures and their own metal, you'll see that shift, and international ticket prices are generally higher than domestic. I mean, that's probably like the most obvious thing I could say, right? And so you'll see that revenue start to move, continue to move up, and it should translate to higher earnings.
So where are you on JetBlue, and whatever happened with the Spirit deal?
Yeah, so people forget we have a market perform on JetBlue. They do have international. They started Paris recently. They're starting Amsterdam. They do London. And then, of course, there's the Caribbean, Mexico, Northern South America. We have a market perform on the stock, mostly because of the uncertainty surrounding Spirit. So where we are is the Justice Department is suing to block the merger, and that trial gets underway in mid-October. So we should have some resolution before the beginning of the second quarter of 2024.
Do investors think there's any brighter hopes based on what happened with Microsoft Activision, or is that not applicable?
Yeah, no, actually, Kelly, I think that's a really good read through to what could potentially happen with JetBlue. I feel like this Justice Department doesn't like mergers in general, even when they make a lot of sense. And they're probably a little bit emboldened by the fact that
that's it right there. This is what we need not to vote for. It should be not up to them whether they. She just said.
On the Spirit merger.
All right, we might vote for better or worse, but that's another discussion. Helene,
she's just said we don't think this.
Helene Becker from Cowen. All right, that does it for
this Fed or not Fed, but this FBI or whatever it was, that she said that they don't like mergers and acquisitions. Like, well, it shouldn't be up to them. It should just be up to the two parties. You know, if they're not deliberately hurting people, like, and until it's a problem, like, that's what I mean. It's crazy. It shouldn't be up to them. If we have a free market, it's not. We probably wouldn't have a Federal Trade Commission. You know what I mean? All I can do is think of that meme with that guy like this on the block. I think he's on the block, right? He's like, the more you know. Or just think about it, you know. So, man, it's just frustrating. It's just really frustrating. And we're talking about the same people who I don't know. I'm not even going to get into it. There's no reason to. There was a lot of things out here that I wish I could help change. And change for the better. That's all I'm going to say. Keep it at that. Apple has a legit pennant going on right now, guys. You guys see this? That's crazy. That's crazy. AMD had it a little bit, but Apple's is like perfect. Apple's is perfect. What's it going to do? I think we're there. I think Apple's going to have to make a choice.
Welcome to Power Lunch, back with Kelly Evans. I am John Fort. Coming up, Disney gives Bob Iger 2 more years, extending his time on the job, at least 2. We'll see what it ends up being. One of his key moves could be taking ESPN direct to consumers. Much more on what this means for the stock and the company. Plus, we're only about 2 months away from the kickoff of football season. NFL Commissioner Roger Goodell about to join us. What does he think about that potential major move by one of its big partners? We'll ask about that, streaming, gambling, and Kelly, I know you've got some questions about Aaron Rodgers.
Kind of a long-running joke here with the Jets fans in the building. But first, let's get a check on the market. Speaking of your green, there's the Dow up 45 points today. The S&P up 28 to 4,500, and the NASDAQ up 183 or 1.3% today. 4th day in a row of rallies. New 52-week high for the Dow. Bob Iger, not the only big name on CNBC this morning. Exxon, Delta, Pepsi, also with some news today. We'll hear from those CEOs and get the trades in these names coming up in 3 Stock Lunch. And Alphabet up 4%. Morgan Stanley and Cowen both bullish on the stock and raising their price targets today. Cowen, though, pointing out YouTube is losing.
Oh, wow. Fed Bullard. Bullard stepping down, guys. Wow. Wow. That's in August.
Core to Disney's business, but he carved out ESPN from that, discussed potential plans for sports and the network. Here's what he told our David Faber.
There is an inevitability, by the way, you raised it, to taking ESPN and direct to consumer. Yeah. We haven't said when, but we do know that it will happen.
Is it sooner than you had thought?
I don't know if the market moves off of that.
No, I think I'm
not
much
sure.
More certain about when, but not prepared to say when that is. I won't say whether it's sooner or not, but I'm enthusiastic about it.
For more, we're joined by
Bostic was who I was thinking of.
At NYU Stern School of Business, and
but yeah, Bullard.
Managing Director at Loop Capital Markets.
Oh, Dean at Purdue University, Purdue of the Fed, and that man Bullard. He has a duty of being.
I don't know who thought he was only taking 2 years.
Whatever.
He's taken 4 at least. Is that good?
Whatchamacallit, a dean for Purdue.
What Bob Iger and others maybe didn't get right the first time?
Well, it's
Purdue
not
the
great
announcement.
succession, but it's good to have Bob Iger back. I mean, he is the world-class CEO. Did a great job with Disney when he stepped up as CEO in 2005. That 15 years was one of the best runs any media company has had. The industry's going through a lot of challenges, as Bob laid out this morning, and I think he's the right person to take them forward.
Susie, Iger was one of the great, if not, the great media CEO of our era because of what he's built in part, Marvel, Lucasfilm, putting all that together. But on the efficiency side, what's his record like and how important is that in a market like this?
Well, it's getting better. I mean, I think he understands that that's one of the priorities. I'm not sure that's what the board was thinking when they got him to sign up, probably in their minds forever, or they would like him to stay around. What he is their guy. They love his vision. They believe he's the only person who can get them from point A to point B, and they're going to be behind him.
No, this is him.
About him is he's so
He is.
linked to the company. He is.
I like Fed Bullard. Damn, it is him that's leaving.
The only CEO who can do
Shit.
changes, which everyone is aware need to occur.
But Susie, so much.
I mean, it don't matter, but like, so like he would do a lot of cool things. If you guys don't know, like, I don't know. He gave you a reason about 2 months ago or so, maybe 3 months ago, when he had a meeting, like a luncheon, and he had told the world and anyone that was listening why this China being the world reserve currency will never happen. And he's really smart, and
there's still actually very
yep.
people there. I don't think everybody
Yep.
is left. I think there is great
So,
there. Otherwise, the company wouldn't
bye-bye,
be doing what
Bullard.
it's doing, facing some very significant challenges in a very complicated industry. I think that there will be a handoff. If I could ask the board to do one thing, it would be to stop this sort of every 2 years thing and just say, look, he's here for the next 5 years, and give him the runway that he needs.
I feel like it's going to be an antsy end of day, like rally into the into the close.
They're just not ready for it yet. The right person's not there yet, and the complexity is at a point where the switching costs are just too high. And look, it's an industry where there's a lot of churn in talent anyway, and I think that there's somebody in the ranks there who will stay because they think they have a shot at it.
Alan, have they kind of shot themselves in the foot with succession planning? Should they have allowed, kind of a new leadership years ago to avoid some of these problems? Or is Bob Iger the right person to lead the company through this tumultuous time?
I mean, I think he's the right person to lead the company. But I mean, listen, Dana Walden running the studio is terrific, and the content side, Josh Damari at the theme parks has done a great job. So I think there's plenty of talent inside. I don't think they're losing big talent because of fear that Bob is controlling the whole place.
Yeah, Susie, what do you think?
I totally agree. I'm completely with you. I think there's great people inside, and some of them probably have been told that they're in the running. I think that he shows up at conferences with this talent, sort of signaling that he's looking at this talent. And I think the board and probably he agree that the time is not now, and that they're waiting and they're learning and they're taking it in the right time for the company. Why rush it? He's there. He obviously loves the job and wants to do it, and they love him. And so why rush this succession planning? He's up to the task.
Alan, I thought that Iger's comments on sports in particular were really interesting because the costs are so high and getting higher. We're about to talk to Roger Goodell about that, but he seemed to be focused on what else you can build around that core once you've got those franchises in place, the youth of the audience, the size of the audience, at a time when he's trying to be efficient with streaming.
There she goes. She's going to try and rally a little bit, guys, girls, women, men. That's crazy. So if you didn't hear and you're just joining us, Fed Bullard is stepping down. Did not see that coming. He is going to be a dean at Purdue University. So he's got a much more cool job. He gets to live his college life, living on campus, having college parties, wearing a shirt that says college on it, all that fun stuff. Football games, they have a really good. Purdue's had a decent team past couple years. So
predecessor to
just
or the
doing big things.
To them converting
Look at the
ESPN
spy.
to a hybrid
But
linear streaming
spy's like,
content
bye-bye,
streaming
Bullard.
business, and then eventually to 100% streaming business.
Bye-bye.
Susie,
We
if I
will
could
see
kind of,
you
take the
later.
off of Disney to some extent and ask, this
Rippin'.
is a tremendous time for media companies, broadly speaking. The fact that Bob
Wow.
Iger's even thinking about some of the moves that he kind of hinted
That's
at tells you
crazy.
that there could be a lot of change in the next few years. Walk us kind of strategically speaking through the kinds of things we should be thinking about that could reshape the landscape.
I told you guys to hop in. We're going to 465. Whoever wants to come, let's go.
Creating it and how much they're going to pay for
We're on our
it
way
is
to
obviously the big open
465.
question. The idea that writers could go on strike and that, I mean, right now there's tons of content around, and so companies, media companies are able to play a waiting game, but the moment's going to come where they're going to need to create new content. So that's one of the really big questions. The whole idea of what the fallout is in streaming is another one. And so I think it's an uncertain, I remember 5-6 years ago thinking, oh, there's just no visibility in the media space anymore, and the visibility gets less and less and less. What that brings me back to, though, is the makeup of the Disney board and some of the other boards of the media companies is they have on them people who have weathered a lot of storms, and the Disney board is case in point with Mary Barra and Carolyn Everson and other board members who have seen industry go up and down, and they are going to, and at the point that we're at where there is such limited visibility, saying, look, we're just going to ride this storm out, and whatever comes, if we've got a leader who understands
NVIDIA
the
went.
company and its details,
Damn it.
and can do both short-term and long-term at the same time, which of course is
Just gotta give
is
it
the challenge
time.
for every leader, then we're just going to stay the course, and something could come out of left field. It could just blow up the whole space again, some new technology that we haven't even thought of. Look how AI has turned every other industry upside down, and it's going to turn media upside down too.
Or like AR and VR, as Bob was at the Apple Worldwide Developers Conference. He was there with Steve Jobs when they were bringing shows onto an iPod, and now he's there with the VR goggles.
Yeah, and I take everybody's point that in Sun Valley, this is where you start to have interesting conversations about kind of reshaping this landscape. By the way, real quickly before we go, price target on the stock, Alan?
Yeah, price target's $110 a share. I mean, you're buying the stock because this company has the best franchise in the media business, one of the best management teams in the media business. The next couple of quarters may be
Gonna miss
challenging,
Bullard.
but that's more cyclical. Iger's going to figure out the movies again. The theme parks may be weakening a little bit domestically. They're doing great internationally. They'll keep coming back. Keep in mind, domestically, even as good as they were last year, attendance was still 19% below the 2019 level.
Right.
So all the growth has come from pricing. There's still a lot of room for growth in the theme park business as well.
All right,
And
Alan
DTC
Gold.
will get profitable.
Alan Gold, sticking with his optimism. Susie Welch, thank you so much for your time as well, discussing Disney today. We appreciate it. Now to some major news coming out of the Fed. St. Louis Fed President James Bullard is stepping down, apparently to take an academia job. Steve Leisman joining us with details. Hi, Steve.
Hi, Kelly. Yeah, James Bullard, one of the longest-serving bank presidents on the Federal Market Committee, is stepping down today.
One of the longest-serving committees of the Fed.
School at Purdue. He has been at the Fed. I'm just double-checking the release here because it's a long time he's been there, 33 years, but he's been president since 2008. And as you know, Kelly, we have a relatively new crop of bank presidents. And Bullard was, I have not been able to confirm if he's the longest serving president, but certainly one of the longest serving presidents on the FOMC. And he's going to be dean. He's stepping down today, going to be advising the board at St. Louis Fed and the bank until August 14th. And then August 15th, he starts a job. It's fairly unusual, I want to say, for this kind of immediate departure. Usually the bank presidents stay in place.
That is weird.
Is found. Sometimes they leave and a replacement is found later. And this process of replacing him can take a long time. I think they're still looking for a president of Kansas City after George stepped down. And right now, it looks like Kathleen O'Neill Pais, I guess, will take his place. She is the chief operating officer and first vice president. Bullard is not a voter now. It looks like St. Louis next has the vote in 2025.
Steve, how does Bullard's coming absence from the room shift perhaps the tenor of the conversation at the Fed? I mean, voting member or not, he's been a presence for so long. You're familiar with the position that he's had on rates recently and the sort of Fed speak that he has delivered. How's it going to shift the tone of things?
So Jim has been very much a forward thinker, sometimes too forward for some of his colleagues. But he has pioneered a lot of different thinking. I think when it came to raising by 75 basis points, Jim was one of the first ones to lay it out there. He also laid out a controversial look at the Taylor rule that showed that the funds rate may need to go from 5 to 7%. That's, I guess, since been not necessarily confirmed, but been part of the conversation. He has led the way, and he's sort of led you astray every now and then, but he's always done what he's done based on research, I want to say, and some form of economic principle behind it. He was the first guy, as I recall, to not put in longer-term Fed funds forecast because he suggested there are potentially multiple equilibriums out there. I don't want to say he's a hawk. He's been very hawkish in this recent hike, but he also was among the first when it came to being dovish for the pandemic and times before that. So I don't think he's a dyed-in-the-wool hawk. He's been extremely hawkish through this process here, and he's been one who said the Fed needs to keep raising rates in this process. But I think I could definitely point to other processes where Jim has been more dovish than your average Fed member.
I agree with that, Steve. I'm seeing a lot of takes about, the Fed immediately loses its biggest hawk. He's not certainly always been that way. Would you say that's the case right now, that he's even the most hawkish member?
I think so. I will say this. When Jim put out that look at the two different Taylor rules that showed the range of 5 to 7%, I have continuously asked him about where we are with those calculations of his, and he's suggested that as inflation has come down, that top-line number of 7% has come down as well. So he's not maintained this uber hawkish idea. I think right now he's been very, very insistent. And at the beginning of the process, the reason why he was advocating 75 basis point hikes was because he felt as if the Fed did more at the beginning, it would have to do somewhat less hiking at the end. And so he talked about the need for the Fed to get out in front of the rate hikes and get out in front, and it was behind the curve at the time, and to perhaps do less damage to the economy. He's also been pretty upbeat on how the economy is weathering this, and he's suggested that we are not necessarily headed for a recession. So I think he's felt pretty good about his policy stance, and I don't think it's been wrong.
All right, Steve, thank you. We appreciate you joining us on the Newsline. Steve Leisman on the news that the St. Louis Fed's James Bullard is stepping down to take a position with Purdue University. Meantime, media moguls are gathering out in Sun Valley, Idaho this week, and it comes as talk about the future of ESPN is very much in focus now. Streaming, of course, continues to have a big impact on leagues, including the NFL. The NFL brought Sunday Ticket to YouTube in that groundbreaking deal last December and is wrapping up the first season of Thursday Night Football on Amazon. Joining us now from Sun Valley, Idaho, our own Julia Borson with a Power Lunch exclusive interview with NFL Commissioner Roger Goodell. Welcome to both of you, Julia.
Thanks, Kelly. And Commissioner Goodell, thank you so much for joining us here in Sun Valley. We sat down here last year, and the big question was, where were you going to make a deal for Sunday Ticket? As Kelly just mentioned, the deal went to Alphabet, to its YouTube, which is really a big shift away from DirecTV towards YouTube. What are your expectations for the deal and for Sunday Ticket's viewership now that you're going to be over at YouTube this fall?
Well, I think first it's good for our fans, and it gives greater access for our fans to a much broader universe. We're thrilled with YouTube TV and YouTube and Google, the technology, the innovation, the desire to really use this to expand and elevate their platform. We think it's going to be a terrific product. We know it will be, and it's a challenge when you're shifting platforms. Awareness, making sure our fans know where to get it, and to get them to make that move. When there's no content up today, it won't be until September. So that's a big effort for us.
Speaking of shifting platforms, you did shift Thursday Night Football over to Amazon. The viewership there did decline. What is your expectation for season 2? And do you think that was more about the transition, or do you think it's just more about shifting onto a more fragmented digital universe?
No, Julie, this is a long term. We don't make those decisions on the basis of one-year deals. And so for us, the streaming platform on Prime Video is going this way. And so this is a long-term play for us. We are thrilled with what we had last year. We've made some changes to the schedule. We've all have a basis from the first year. I expect that will continue to grow in a very popular way. And I think they'll bring technology and their innovation.
I beg to differ, Mr. Goodell, because I assure you, college football is so much better than the NFL. And this Amazon stuff, like people, the games you had even chosen were shit.
That he's long-term committed to sports and to ESPN, but he does see the inevitability of bringing ESPN.
But we are
focusing more
right around the corner, everyone. From
what does that mean for you in the NFL?
Well, it's a positive for us. You know, when our partners are continually looking to innovate and trying to find the platforms that are going to
just want to hear him real quick
and have the greatest potential for growth. We've recognized that by going to Thursday Night Football on Amazon Prime and also with YouTube. So we contemplated this in the context of our ESPN deal when we did that a few years ago. So we think this will be a positive change for our consumers, and you know, I think our content is going to be a big part of that.
Kelly, you want to jump in here?
Julia, thanks, Commissioner Goodell. I'm not sure if we've had a chance to speak, so I welcome the opportunity.
Can I stress to you guys, if you guys did not buy anything, like these mid-cap companies, I can't tell you what to do with your money, but I would honestly start thinking about it. I really would. I would start thinking about picking up some of these companies off the lows. Look at Penn. Look at Penn. Penumbra. I meant Penn National Gaming, but PENN. PENN. It's on its lows. DraftKings is kicking its ace. Gamblers don't like DraftKings, though. They don't like them. Maybe they've changed, maybe they haven't, but I know on forums, they did not like DraftKings at all. There's way too much shady stuff going on.
Television. We want to bring more of our
that's crazy.
To our players, to our coaches,
it's underperforming,
in general. And this is
like horribly.
And I think this is a
Penn Gaming is performing horribly.
See the inside, see what's
that's
happening.
Crazy.
And it's something we
I would expect them to do pretty damn well compared to DraftKings, but I guess not.
And that's across all sports. That's just not football.
I'm going to have to dig in and find out why. Why is Penn National Gaming underperforming DraftKings?
And the fact that players themselves are allowed to bet, you know, you wonder if that's really in their best interest, right, at some point, or if it's fair to allow them to bet, even though a lot of the rest of the staffers and people at the organization can't. Should we expect this policy to evolve in the next couple of years or to stay the way that it is?
No, I think all our policies will evolve, particularly in this area, as we have more and more states that clearly are going to be legalizing sports betting. This has all been an adjustment to the Supreme Court decision. We obviously, number one for us is protecting the integrity of our game, but we also believe in educating our players, our coaches, our employees, everybody involved with the NFL about the importance of that, and then also being very transparent. And also being relentless and making sure that we do everything to protect that.
Roger, I almost hate to do it, but I want to take you back a decade ago. We were talking about, when it comes to the NFL, a concussion controversy, and then after that, the kneeling controversy. When it came to culture wars, sports, and particularly the NFL, was right at the center of it. I mean, now Iger's in the hot seat. We're not talking about that with you. But what did you learn during that period?
Yo, Brody, stop trying to hit the nerves. It's football, Brody. You inevitably can't help. Like, accidents happen. No one's trying to kill anybody, but they gonna hit you. It's football. It's hyperbole. It's a hyperbole, like Biden says. It's football.
At
Come
some
on.
point in time, someone
Come
needs
on.
to raise an issue.
Come on.
Or try to discover some aspect of our operations. We know the type of transparency. We know the type of platform we're in. We operate at the highest possible standards. We're not perfect, but we strive for that every time. So we do what we believe in. We work with our players. We work with our clubs. We work with our partners, and we try to make sure that we represent them. We represent their viewpoints, and we believe in allowing them to express themselves, recognizing that everyone has a responsibility to be good citizens and be respectful of others' viewpoints.
The NFL certainly plays a big role in American culture, but it also plays an essential role in the TV ecosystem. You know, going back 10 years, just as John was, sports was considered the core of what was holding the TV bundle together. Now we see overall TV subscriptions declining. You have ESPN talking about going direct to consumer, and you are making more deals, bringing your games and having more digital-only games direct to consumer. How do you see the role of the NFL and the TV bundle as you make more of these digital and streaming deals?
Yeah, Julie, you know, I think the NFL and its content, because of the popularity of it, I think we've had a vital role in creating new content platforms and new distribution platforms. You go back and you look at broadcast television, that was a great partnership for us in the 60s, 70s, 80s. As we got in the 80s, cable came along and we went to ESPN originally and Turner. We helped make those platforms more popular. We had Sunday Ticket on satellite, and that was a new platform. Now streaming's coming along. We'll play, I think, a vital role in how that continues to evolve. For us, our philosophy is we need to reach as many fans as possible. We want the ecosystem to support that.
Well, reaching as many fans as possible isn't just about streaming, but it's also about international expansion.
Absolutely.
Can you give us an update on your international expansion plans? Will there be a new division? And how do you think about international investment amid all of this conversation and controversy around Saudi ownership of some of those golf assets?
Well, we believe that we want to share our game with the world. And every time we do, we get an incredible reaction. We have 5 games in Europe this year, the most ever. Those 5 games sold out in a matter of minutes. And so we believe that our future growth and a real important opportunity for us is that international growth. So we're going to continue to invest in that. Our clubs are committed to that. We're committing our content. We're moving games. When we expanded our season, there was a commitment on behalf of the entire NFL to play international games and regular season games. So I see that continuing. Where it goes as far as the franchise being located overseas or a division, those are things that we're excited about. We're not there yet, but we're going to continue this growth, and I believe it will continue to be, and it will be a global sport.
And just a quick follow on that question of potential foreign ownership. What's your perspective on that now? I know Adam Silver has come out saying he does not want any Saudi ownership of teams. What's your sense of things?
Well, right now, we do not have any kind of public ownership of any of our teams. We private investment. We haven't made the move as other leagues have to any kind of public investment. It's something we'll contemplate at some point in time. But we really like our basic model now, where we have private ownership, and those owners are in the meeting room. They're part of the league, and they're part of our success.
Well, thank you so much for joining us here in Sun Valley. I know you have a lot of meetings down at the lodge with all of your many partners who are here. And thanks for talking to us ahead of some big changes this fall.
Thank
NFL
you, Julie.
Commissioner Roger Goodell. Kelly, John, I'm going to send it back over to you.
I'm trying to do the math. Are we about 6 weeks out from we're getting close, you know, end of August, early September?
Don't ask me about sports calendars, Kelly. I'm useless.
2 months from opening day, our experts tell me. Thank you,
Good
Paul.
to know.
Julia Borston, thank you. Of course, our thanks to Commissioner Roger Goodell as well. Speaking of the business of sports, on July 25th in Los Angeles, California, CNBC and Boardroom host Game Plan, a high-powered event bringing the most influential leaders across the sports landscape, including athletes, owners, investors, and innovators. They'll talk sports and business. Learn more at cnbcevents.com/gameplan.
Now coming up, the FTC is ready for a fight on all fronts. The regulator now taking a look at ChatGPT and OpenAI over the technology's potential impact on consumer privacy. We'll be right back.
Eastern.
Welcome back to Power Lunch. Another tame reading on inflation from the Producer Price Index, sending stocks higher and bond yields lower. Rick Santelli joins us from Chicago with more. Rick?
Hey, John. Yes, it was a big day, but it's really been a big week. If you consider where we were on Jobs Friday, well, let's look at a 2-year note yield starting on the 6th of July. We're hovering at 511. The intraday high, 511. You see where we're at now, 461. And one of the main reasons for that, outside of the notion that the Fed may be done, is that it failed to close above on this chart. You see that big high there? Well, that high in early March was 507. Okay? And the reason that's such a key level, let's open the chart up, is because it was rejected. The day we traded up to 511 intraday, we settled below 507. Remember Family Feud? It was technically rejected. And that's one of the main reasons the rest of the curve has been moving lower, and percentages for the set meeting are well below their 28 to 30% they were hovering at just several days ago. And if you look at the 2s-10 spread, this is since July 6th as well. It has basically moved 20 basis points in favor of the spread tightening up, meaning 2s and 10s are 20 basis points closer. That's significant, and it happened in 6 sessions. Finally, if you look at the big chart of 2s to 10s, we have a double bottom there at 108. Just because it's a spread doesn't mean they're not looking at the technicals. It's worked like a champ. And finally, the dollar index. We all know when interest rates go down, that's a huge negative for the currency of that country. Well, there you go. In living chart color, it's at the lowest levels potentially on its close in 15 months.
Wow.
Kelly, back to you.
Rick, thank you. We appreciate it. Rick Santelli. To Contessa Brewer now for the CNBC News Update. Contessa?
Kelly, President Biden has labeled Senator Tommy Tuberville irresponsible for objecting to hundreds of military nominations. The Republican senator blocked the appointments to protest the Defense Department's reproductive health care policy. It provides paid time off and travel expenses to service members seeking abortions. The senator's actions disrupt what is typically a routine confirmation and affects more than 200 senior military officers. Tuberville told NBC News today he'd consider ending the holds, but only if the Senate agrees to put that health care policy to a vote and agrees to rescind it if it fails in the Senate. The Biden administration is urging Pfizer, Moderna, and Novavax to price their updated COVID vaccines at a reasonable rate. The companies are set to release the shots this fall, and the government is planning to launch a $1 billion bridge access program that helps distribute vaccines to people who don't have insurance. We don't know what the manufacturers plan to do on pricing just yet. About 100 million Americans are sweltering under the current heat wave. Forecasters expect temperatures to shatter records throughout the Southwest, with conditions expected to get worse over the weekend, especially in Arizona, where temperatures regularly have topped 110 degrees over the last 2 weeks. Kelly, John, as you know, it's not that 110 is that hot for Arizona. They see that almost every summer. What's unusual about this is that long stretch of uninterrupted heat.
Yeah, it's brutal. It's like their winter. You can't go outside. I've experienced it. It's not fun. Contessa, thank you.
Sure.
Ahead on Power Lunch, we'll hear from the CNBC suite. Delta CEO Ed Bastian saying premium demand is paying off. Pepsi's CFO speaking out after raising full-year guidance. The CEO joining Squawk on the Street tomorrow. And Exxon CEO Darren Woods announcing a nearly $5 billion acquisition. All those and more in Free Stock Lunch.
I cannot stand that damn noise. I gotta turn it down. Like, why does it have to do that? Seriously, why? I know, bro. What's up, man? How you doing, bro? Sheesh. I know it's right, man. It's crazy. It's crazy. I love it. I love it. It's awesome. Everything's going. I said this in a video last night that you got gold, energy, silver, real estate, industrials, Bitcoin, small cap or mid cap technology, just everything but the dollar and rates. You know, that's a sign of a healthy bull market. You got banks going, you know. I'm going to play, I'm thinking about playing PNC for earnings. I'm thinking about it. I'm watching it. It's pulling back right now. It's got a beautiful reverse head and shoulders on the weekly chart. And I don't know how liquid it is, though. Okay, so it did pull back here. Did pull back here. The past couple of days, it's been on a run to the upside. So I think there's some people that, some institutions or some, you know, a few that's already beaten me to this. I mean, this thing is about straight up as you can get. You know, when you look at it on a 15-minute chart and whatnot. So, what we have here, though, sorry. We have a weekly chart that is showing us a reverse head and shoulders. Look at that. Sheesh. Left shoulder, head, right shoulder. I usually can say it better, but that's crazy, bro. I love it. That XRP and crypto, like now I'm going to be buying. Now I feel like the time is, if you're not buying and have not bought, please do so. Whoever sees this, if you have not already, you got to do so. I'm not here to tell you what to do with your money. Just telling you what I would do if I were you. Because it's happening. Everything's going up. Everything. Banks, like your regionals. This is a regional bank that's putting in a bullish pattern. And JP Morgan's already at highs. You know, you're getting your laggards. You have your leaders and then your laggards. Now your laggards are catching up. That's a healthy market. Watch out. August, September, and October. SPY's at 460, 475, and you don't want to look left and say, how did I miss it? Why did I not just buy leaps? Not leaps, but why didn't I just buy monthlies or something? You know? Why was I not in calls? Let me see here. So, I have this as an idea for an earnings play because I think PNC isn't going to do too bad. They may do bad. I don't know. But if they do okay, then I don't know. I'm gonna figure out, because I don't even know how liquid they are. I don't think this stock's very liquid, especially with options. The spread on them is probably insane. So when I get to doing that, I will I'll post it in the comments whenever that time comes, or in the I'll just post it somewhere. I was gonna say in the description, but I could always do that. I could always put swing trades and where they're at in there.
Here with our trades today is Jerry Castellini. He is president and chief investment officer at CastleArk. Good to see you, Jerry. Are you a buyer of Exxon?
I'm very much one. In fact, the weakness this year.
That's all I have to say. Wow.
Opportunity. The stock has been doing quite well.
Wow.
And this is the time.
80, 90, 100, 20 goddamn dollars. Sheesh. Got me saying it now.
And yet it gives them another monopoly. Exxon loves them. Now they monopolize CO2 transportation right around the markets that they are going to be able to address as a profitable business. So it's another niche that Exxon's in, and it actually sits behind these.
I would not step in front of that thing. I would not try and step in front of it. Don't get cute, get long. Don't try and be cute and get short. You might get a pullback unless you know what you're doing. Because this thing will run you over.
Slightly higher today after the beverage giant beats earnings estimates for the second quarter and raises its full-year outlook. But the company's volume did fall as a result of higher prices. Here's what CFO Hugh Johnston had to say about it.
Keep in mind, commodities for us right now, we don't think they're actually going to be going down in price. We think the rate of inflation is going to be reduced.
Seriously, so crazy. That's so crazy. And I had no idea about this XRP. I had no idea. I don't even know where I was. I must have been living under a rock. I feel like I remember hearing about it. I mean, I know they've like tried arresting a few people, like the one guy from China, I think, or he was like Asian, but he was in America or something, and then
Consumer-related products companies.
um,
23 times earnings is not probably pricing in anything more than a
I
recession.
wonder what's gonna happen with that Binance stuff too. You know,
But it's just
Gary Gensler looks like like an idiot. Like you're talking
I just don't
the head of the Securities and Exchange Commission, and they want to play around and talk about, you know, and the government wants to tax you, but yet at the same token, they're not willing to say that it's capital gains, because technically, if it's not a commodity of some sort, how can you get charged capital gains if it's not considered? Like, it makes no sense to me that they can even do that. Like, nobody has of power has even said, like, yo, listen, you either have to consider it a commodity, a currency, a security. You gotta do something. You gotta
Business is going to continue, what we can tell.
whether you believe in it yourself or not, you still have to make it, you know, a security, a commodity, a currency, or something to be able to charge capital gains on it, capital gains tax. I mean, there's got to be a law for it. There's got to be a law. If it's it's not a security. So how are you going to get taxed? I wouldn't pay it. I'm just telling you guys, if I had crypto and did all that, I would not be paying taxes, and I would go to court. I would. You know, whether I win or loss, I would not pay them taxes until they would admit that it's a currency, it's a security. At least, you know, you're telling me you're going to charge me capital gains, but yet the same guy in your administrations doesn't consider it anything. It's a joke to him. My jokes don't get charged capital gains tax. You know what I mean? And they're not funny.
So to speak, on demand for overseas and domestic travel. And they're the best in the business. They would know. They would give you reason to pause if there were one. And so far, they've thrown massive price increases at this universe of buyers and travelers. And
They would ask me where, you know, if they came knocking on my door or sent me a letter, I'd say, yeah, go ask the homeless person who's been feeding them every day at 3 o'clock when he's standing at the stoplight. You know, that's my tax.
At his back, because now the investor gets to say, if things slow down again, they'll go back and claim the market they never had. And I would tell you, at the earnings levels that they're now seeing, they're at all-time high margins. They've wrung out all the inefficiencies that the big pandemic caused. And I would give them a little more runway.
All right, to use a phrase. Jerry, thanks so much for all your time.
I knew it. I was thinking about getting long Tesla right here when it was going, as it was getting up to the highs. And I was like, why does it feel like Friday? Like I was thinking it was a weekly, and shit. And this is what you get in these bear markets. You get this low, volatile, just grind higher, and you just blink, a couple days go by, and before you know it, it's 5-10 points higher. What's going on here? Come on. Look at Tesla just pushing and pushing and pushing. Wow. Damn it. I'm so pissed I missed that, man. I was looking at it. Fuck. That sucks, man. What a run by Tesla. Man, that was a money... That would have been a money trade right there, guys. A break through the high. This was a perfect risk to reward. At least I felt it was. You know. Getting it to 280. Possibly even filling this gap up here. Flat top resistance at 282. Unbelievable. Unbelievable. I gotta shut this thing down and log back in. Wow, already putting price grade up. They're already putting out upgrades on Tesla or Coinbase right now, guys. That's a 110 price target now on Coinbase. Now the analysts are coming out. There's no way I can. There's no way I can do that. This is crazy.
Line and for data and broadband. There's so much demand right now that there's a really broadening in scope of how people provide that data from space. This is more of the traditional route that we're seeing with Viasat. They've been in business and they IPO'd back in 1996. Today's their single worst stock drop since that day. And this is all really about the more traditional player trying to beef up their existing capabilities, but there's others like SpaceX's Starlink, Amazon's Project Kuiper that are taking a different approach to providing that service and targeting different customers, going after directly more on the consumer side of the business as opposed to larger enterprise.
I mean, it's amazing. I'm taking a look at the chart. 2020, that drop, and then recently in summer of 22, it dipped below the levels where it dipped today. But given everything that's been happening, with
Almost power hour.
Technology,
Oh my gosh, Tesla's still going. God, I'm sick to my stomach, guys. Guys, I was literally looking at Tesla and unbelievable. That's crazy. Shop is taking its good old time. Shop said, I ain't got nowhere to go. I'm just gonna chill. I'm gonna chill right here and take my time. No. No. Yeah, I'm like, yo, my guy's calling out Twitter. He's like, TWTR, Twitter, it's popping off, popping off. Nah, bro, Tesla. It's Tesla, bro.
Welcome back. It's a super busy day for the FTC. The agency, first of all, filing its appeal to pause the Microsoft Activision deal after its court loss. It's also reportedly opening investigation into OpenAI over consumer harm. Well, this morning, Chair Lena Khan appeared before the House Judiciary Committee. Steve Kovac is here to break it all down for us, and there's much to break down today in Tech Check.
Yeah, I'm going to do it in 90 seconds. Check it out. So Khan spent hours under questioning today in the Republican-led House Judiciary Committee. Question on everything from the FTC's investigation into Twitter's alleged violations of a privacy settlement with the agency and Khan's losing record in all those antitrust cases in court. Also coming out today, Washington Post and others reporting the FTC has opened an investigation into OpenAI. That's the company behind ChatGPT. Now, while Khan didn't comment directly on an open investigation, she did talk about her broad concerns, the harm AI can cause. Here's what she said.
There are no checks on what type of data is being inserted into these companies, and we've heard about reports where people's sensitive information is showing up in response to an inquiry from somebody else. We've heard about, libel, defamatory statements, flatly untrue things that are emerging. That's the type of fraud and deception.
Well, the fraud and deception is what she just said. She just made up a scenario before she went into that and then said we heard. You just had a healthcare company just come out and say that everybody's information got stolen and it's up for sale. You're not gonna what?
Microsoft has options though. Renegotiating with Activision to extend the deadline, or it can just walk away, guys, and pay that $3 billion break fee.
Sure seems, Steve, like the FTC kind of works better when you fear it. Yeah. And we're in a paper tiger situation now where people will accuse Lena Khan and the FTC of taking ideological stands and then trying to construct a legal basis afterward, right? Like, and So are companies really going to be afraid? She was counting on that, on companies trying not to do these deals because they were afraid of what the FTC would do.
And boy, was she grilled about that today. And then my question becomes, look, if she keeps racking up these losses, let's say the appeal does not work out in their favor again, what happens to companies? When do companies start pivoting? We hear about this chilling effect on mergers. When do we start hearing the opposite? Okay, she's not holding up these cases in court, therefore let's go ahead. It's party time again, merger mania.
Though
I
it
don't
still
know.
takes time. It still slows things down. You know, you have to go through a process that might still have an uncertain
And look what
outcome.
Microsoft's going through. They gave themselves 18 months to close this deal, knowing they were going to be heavily scrutinized, and it is going right down to the wire.
Absolutely.
Less than a week left to go.
Yeah, there's more attempted deals that that timeline might get stretched even more.
Steve, thanks.
Thanks.
All right, we have just enough time left for a nightcap. How about a bubbling box office? It's closing time on the other side of this break.
He said deplorable here. Cheers to Costco. That's interesting. Now you have to start it off. You like get your intro. You're like, oh, y'all talking about political ideology stuff that's related to just natural things. Okay, let me tell you this. Convert those games. Well, listen, this is something we've been talking about. Do whatever you want.
I think this apple is. It's. I don't know. I feel like it's gonna. It might break down a little bit. Guys, so check this out, guys. Look at this. I think I'm gonna take a long on Apple. Every time, bounce, bounce, bounce. Not there, not there, not there. Bounce on the 20-day moving average on the daily. 20-day moving average on the daily. Sorry, I'm just getting a little weird. All right, getting a little weird. I'm gonna take a long on Apple.
Version.
Welcome back. Just 2 minutes left in the show and 2 more stories you need to know. First, Ripple's XRP coin surging after getting a huge win against the SEC. A judge in the Southern District of New York ruled that it's not necessarily a security on its face, with many saying the outcome will no doubt have direct and indirect implications for crypto regulation here in the U.S.
We've been watching this case for years to set a precedent. The fact that they said it could potentially be a token is a huge deal. You're seeing all sorts of other, I guess we can call them tokens, take off. A lot of confusion, still about this ruling where they seem to put institutional investors in one class and retail in another. That said, look at Bitcoin today, which is now up to over 31,000, a 3% rally. Ether, look at Solana. I mean, this is really a curveball that will support the crypto industry for a little while longer, it seems. Meanwhile, the next week or so could be the most important period for the box office in its, well, entire history. It's been hard for the industry to regain its footing after COVID. Most big-name movies are underperforming, or at least not running away with sales. Indiana Jones, Transformers, all a case in point. But we have three huge names on deck now: Mission Impossible, Oppenheimer, and Barbie, all within a week. Mission Impossible, a $16 million opening day expected, could be a strong weekend. Then next week, Barbie and Oppenheimer have huge momentum behind them thanks to these viral TikTok memes encouraging people to see the Barbenheimer double feature. Stars are jumping on the trend too. Margot Robbie and Tom Cruise showing each other's support by watching
I'm getting tired,
each
gang.
other's movies for these blockbusters.
That's nice, but Tom Cruise.
I agree with you, by the way.
I mean, Top
if I could
Gun
only pick
Maverick.
one of the three.
It was the movie of the pandemic that made people realize we need to watch in theaters again.
And like good old-fashioned
MI7.
movies.
My kids are excited about MI7. That's my fault.
If I had to pick one of the three, it would also be that one. And
come on.
Kernan was talking about it this morning. Maybe Tom Cruise will save America, or at least save the box office.
Putting his body at risk. Thanks for watching Power Lunch.
Closing bell starts right now.
Kelly, thank you very much.
That power hour, guys. Let's get it. Let's get focused. Let's not fall asleep.
American Century Championship celebrity golf event. About 90 or so actors, athletes, and entertainers are playing in this tournament, which is owned, operated, and produced by NBC Sports, including SNL's Colin Jost.
And it's just a bounce.
He's going to join me a bit later with yet another Hollywood strike looming. In the meantime, this make-or-break hour
I think I'm gonna take a loan.
with Rally Watch as stocks extend their gains on more positive
I think I'm gonna
inflation
take a
numbers.
loan.
Your scorecard with 60 minutes to go and regulation looks like this. Dow's been up all day long. Really, though, it is the broader market where the action is. Another new 52-week high for the S&P 500 and the NASDAQ, led by communication services. Technology stocks continuing today their incredible run. There's the NASDAQ up nearly 1.5%. Brings us to our talk of the tape, whether stocks are on the road to new record highs. As someone at Goldman Sachs today said they are. Let's ask Adam Parker. He's the founder of Trivariate Research, a CNBC contributor as well. AP, it's good to have you here. Welcome.
How are you? Looking good. I'm looking good out there.
How am I? How beautiful is it here? I'm good. Thank you.
I love being followed by Colin Jost. You know, just another person who's better looking and funnier than me. Thanks for that.
Well, here we are.
You know.
You're neutral U.S. equities. Why?
We just did our second half outlook, and as you know, we were bullish on the first half, and kind of. I think now it's just harder for us to get there on the valuation. So what we wrote is we see the same probability of 10% upside as 10% downside. And to get to, say, 5,000 on the S&P, which is about 10% up where we are today, it looks to me like you have to pay over 20 times the 24 earnings at the end of this year. So it's hard for us to get there on the valuation front. I don't think things are falling apart. I mean, the early signs from earnings season, I imagine you're going to get into that, look pretty good. And so I just think things slowly erode, don't implode, but I just can't get there on the multiple side.
But why is the probability the same, do you think, of 10% up or 10% down? In some respects, couldn't you make the argument, as I said earlier on halftime, that you've gone from a glass half empty market to what I think you can make a compelling case is a glass half full market at this point? If you think the Fed's done, if you think inflation's coming down, if you think earnings are holding up, the consumer's going to hold up, and the economy's not going to fall off a cliff, why are the probabilities equal?
I just think the challenge is figuring out what's going to happen in the second half of 24, like a year from now. So if we're being very simplistic, the stock market sold off hard at Q2 and Q3 last year because earnings decelerated 3 quarters later. The stock market ripped Q4, Q1, and into Q2 of this year because earnings accelerated from the lows. I think the current estimates are sort of flattish, meaning they don't accelerate or decelerate Q2, Q3, Q4 next year. So until I have more clarity on the rate of change of earnings next year, it's just a little harder for me to see a clear path for the market. I think what you said is right in terms of the probability the bear case is lower for earnings. The severity of the bear case, if one forms, is lower. But I think what your difference now is you were playing like 15 times in October of last year, and you're paying 20, 21 times now.
When you hear Mary Daly, obviously of the San Francisco Fed on our network today, suggest that it's too early to say that we can declare victory on inflation and talk about the probability of 2 more hikes before they're all said and done, do you say, here's a Fed that appears that it was, way too late in the beginning and it's going to be way too hard at the end? Is that a fair assessment? Do you think the Fed should just declare victory at this point and do nothing?
You know, I think there's thousands of people who look at everything that everyone on the Fed says and try to create a path. I think it's a hard way to make a living. What I can do is measure Fed fund futures or the perception about rates and compare them to price-to-earnings ratios for the market. The observation I have is that was a very strong relationship for a long time, right? Hawkishness was bad for multiples. And very recently, it's interesting. The perception about dovishness has caused multiple expansion, but any hawkish commentary has not caused multiple contraction. So I think people are just, no matter what they say on the Fed, just think we're very close to the end of the cycle. Whether it's one more hike or not, they don't care. And as long as the earnings aren't collapsing, that's the current mindset. I think that'll change, Scott, over the second half of this year. But currently, no hawkish commentary is causing a multiple contraction.
Well, I mean, you could also make the argument that with what we're seeing in the NASDAQ today, couldn't you, that NASDAQ right now highs the day. It's up 1.5%. On this idea that yet another positive inflation print, the market obviously doesn't think that the Fed's going to have to go even 2 more times. Okay, maybe at the end of this month, the Fed raises rates 1 more time, but this seems to be a clear bet that the market is making that the Fed's not going to do what Mary Daly, or for that matter, almost anybody else in that room suggests they still might.
I think if you flip your question on its head a little, I like the question, and just say, why aren't you more bearish? Why is it, given things have ripped, why, and I think the answer to that is that as inflation comes down, some companies can start seeing a change from headwinds in their margins to tailwinds. Think about what's happened to commodities. The dollar's weakened. Labor costs probably can't rise at the rate they did. So, my simple explanation for this breadth issue that comes up every day, why is only a few stocks work, is because those mega cap growth stocks weren't hurt by rising inflation. Their gross margins were up in most cases, whereas the rest of the companies that weren't mega cap growth had margin pressure. So to the extent that some of these things, CPI, PPI coming down, wages peaking, to the extent that can start to moderate, headwinds turn into tailwinds. Maybe that's the case for not being negative. It's just you'll see more companies show some margin progress into next year.
I'll tell you one person who is not wavering at all in his bearishness, I think it's fair to say, that is Greg Branch. Let's let's expand our conversation. Stephanie Link is with us, of course, of Hightower. Greg Branch of Veritas Financial Group as well. So we spoke the other day, Greg, and you were pretty much unwilling to even change your tune in any, even incremental way. Now here we are, a CPI later, a PPI later, and a couple more days of a stock market that seems to want to go higher. Are you still unwilling to change your mind?
I do not yet have the data to change my stance, Scott. And, I'll address 2 things that were underpinning the bull argument. The first underpinning of the bull argument, and we heard this a lot over the last 2 weeks, was that core was going to drop down to the mid-2s. We didn't see that. And the other part of the bull argument was that housing was going to roll. We didn't see that either. I wish we had. That would have me reconsider my stance. But when we have housing still up 40 basis points in this CPI, when we've lapped the 5.4 from June.
Apple call. Got to get them Apple calls because I'm thinking, I'm just thinking it's a rally into the close.
Which is why you're starting to see them become more hawkish. So I think what will happen, and this relates back to what Adam was saying, is that I think we'll see some earnings degradation,
NKLA.
not only in the back half, but for 2024. I think earnings for the S&P looks more like 220, 225. When you put a 17 times multiple on that, I just can't get above 4,000 based on the macro views that I have right now.
Who said that the core was going to be in the mid-2s by mid-July of 2023? I can't think of a single person who made that prediction.
I'm not going to name names, but Joe asked me about it yesterday morning, said that a noted bull said the core would be 2.5% this print, and we're nowhere near that. And so, unless you believe...
Man, I hope it's not a failed breakout. I don't think it is, but I gotta find something that'll get me PLTR. No. Spot.
by 20 basis
Oh,
points.
oh my gosh, look at
Core is still growing,
Spotify, guys.
and
That
airline
thing
did
is
a
a
lot of work
beast.
in that core number. And so when you still have the areas that the Fed is targeting
RBLX.
growing pretty
RBLX.
meaningfully, it's hard to say
RBLX.
that they can stop it.
Yep,
It's
RBLX
hard
did
to
not
say
go
that they can
anywhere. That
stop
was a
here.
good
The
move
market's
by
wrong.
us
And
to
the market
sell
has been wrong
those
before. It
calls
was wrong
with
several times
profit.
last
Thank
year.
you very
So
much.
that has to be my position when my outlook on estimates is meaningfully below where consensus is.
Well, at what point do you admit that you're wrong and the market's right?
I'm wrong right now. I've been wrong for 6 months. Hopefully one of the values I provide is that I'm fairly consistent in my views based on the data, and the market has been detached from, I think, where the macro fundamentals are. Unlike Adam, I did not catch this. I did not participate.
Stephanie Link, so you've gotten two views here thus far. What is yours? Is it time to be glass half full at this moment because you think that these really positive reads that we've had on inflation this week are just the beginning of even more such things?
Yeah, I mean, it's not just inflation, though, right? I mean, if you look at it's certainly CPI, PPI. Look within the PPI today, the services number really strong. We had stronger initial claims. The 4-week moving average fell 7,000. That's good. The Atlanta Fed wage tracker is running with wages up 5.6%. So real income is going higher as inflation is coming down. That's very good for the consumer. And I think overall the general economy is holding up better. That will mean that you see better than expected earnings. I mean, look what we did today. Look at Delta and Pepsi. Delta had 19% total revenue growth with operating margin expansion. Everybody thinks that margins are going to fall. This company just expanded margins. Pepsi at 13% organic growth. That's like
Tired, gang.
At a consumer
Freaking
packaged
tired.
goods company. So we're off to a good start. It's not.
I can't believe it literally.
Picture is going to look like when everyone reports earnings. We're certainly going to have some disappointments, but I think overall earnings are going to hold up much better than expected.
Adam, when you hear somebody like Greg, talk as negatively about the market as he has, and it's not like what he says doesn't make any sense. I mean, inflation at the core is sticky, right? So he says it's going to remain that way, and earnings just don't make sense. Their projections just don't make sense for how optimistic people have seemingly gotten in a reasonably short period of time. What's the pushback on that?
Actually, like when you're a little kid and you have the math answer, but then they tell you to show your work. I mean, our numbers for 2024, we're using $225 in earnings. So I feel like he and I might have got the same answer on earnings. Maybe we're just showing our work a little differently. I think the earnings for next year are going to be at risk. I don't see a V-shaped recovery. It's more that there's a drumbeat out there, a consensus view from several of the big firms that earnings could collapse and be 180 or 190. And relative to that sort of sentiment, earnings look like they're much better. I think Steph's totally right that you're not going. You're seeing good numbers so far, and it's hard to get your earnings that low. So I think one of the reasons the market's up, that's a legitimate, real reason, is the probability of the bear case and the severity of the bear case if one forms are just much different.
I literally just got my order filled and it pulled back. You busted. You busted.
I'm now assigning a lower probability of the bear case.
No. That's so funny.
That you could say that today.
It's all good. It's all good in the hood.
The second is, if you look at every economic outlook,
If you know where you're going,
big firm, last year
you
for this
stay
year,
up out the way.
were mentioned 0 times. And we can
Your ass
debate
up
whether
out the
stocks are
way.
valued and what's kind of where the phrase is being used correctly or incorrectly, but we can't debate that there's some actual impact on companies' earnings. I mean, Nvidia had the largest.
Don't you love it when a stock goes up and
ever. So there's some reasons that things are different now, and I could say that are legitimate to be more
let's
optimistic.
see, what was I looking at earlier?
The part that's at least, I think the hard to justify
Square,
is just the multiple
Shop,
now being multiple turns higher than it
Shopify,
was, 9 months ago.
Shopify, I think it was, right?
Toughest
I keep thinking Nikola because of this NKLA. Nikola! From that commercial. If you guys are like a little older and remember that commercial. Nikola! Alright.
Looks
So,
more and more likely that it could have a soft landing. It brings me to a new position you
let me
have
put up
in 3M. which seem to have
15-minute
turned
chart.
a bunch of pages over the last several days in how people are viewing this company now and the prospects going forward. And it sounds like you're one of them.
It was a big deal. I wonder where.
Yeah,
I'm pretty
well,
sure
the stock has
I've already
certainly
done
lagged, and
this.
it's lagged for years.
And that's the
Scott.
resistance
It's
area.
down 15% year to date. It trades at 12 times earnings, and I do think that the progress.
See, really, what you want to do is be long stocks that are off of their lows. That's what's getting ate up.
The earplugs issue as well. But I think you're at least at the
Oh
right
man,
point
they
right
gave me
now
the
where
freaking
expectations
top.
are really low, and
Or
they're starting to
whatchamacallit.
make progress there. That was a very big overhang for the shares. In addition, when in the past, when settlements have occurred at other companies like Bayer and Monsanto, those stocks tend to stabilize and actually move higher. They also have a restructuring program. You know, I like restructuring stories and cost-cutting stories, and they're going to spin out their healthcare business at the end of this year or early part of next
think
year.
I gotta
you know,
get
I
out
like
of this
spins
thing.
as well. So I think very low expectations. Oh, by the way, there are no buys
I think I
on
gotta
the sell
get out
side
of
for
it.
this stock. There are
I
20
don't
holds
trust it.
and sells. So I like that risk reward a
I
lot
don't
too.
trust it.
Yeah, I mean, some of the commentary, are, you know,
This
earlier
thing
in
is
the
going
week
nuts,
was finally
and I can't
some
even
good
get
news.
it.
You added the target as well, which I find interesting too. But lastly, Greg, let me give you the last word, if I might.
To go green.
Sure.
What would you buy within the equity market right now, even as negative as you
Jesus
are,
Christ.
for the overall direction of
That
where
was
you
a
think we could
stupid
go?
move.
There's got to be something out there that looks reasonably attractive to you, that has a valuation that's more attractive to you than some of the areas that have gotten, as you would probably suggest, ahead of themselves.
Yeah, look, and I think both Stephanie and Adam have hit it on the head to some extent. If I believe that earnings will contract throughout the back half and throughout 2024, then what I'm looking for are companies that do have some margin expansion potential and that will grow earnings. One of the few safe spots where earnings will grow. To some extent, that remains large cap tech. You know, Adam talked about AI. NVIDIA is different than everyone else talking up AI or AI washing, in that they're at the infrastructure level and they are seeing real meaningful change in their business now because of AI versus just talking about it. So I think multiples actually won't matter for those stocks that can show margin expansion and earnings growth next year. And I think that we will see breadth re-narrow around those names as we start to see the macro environment deteriorate the way I think. There are other sectors as well.
I got out of that long right there, guys, on AMD. I should have never taken it. I mean, it's just, I can't trust that it's going to gap up. It may run up.
Maintain margin.
I got to pen it here.
Multiple, you're going to see a tailwind at the end of the year.
All right. Good having everybody. And I should also note, we have the
I'm
S&P
just getting
and the
tired.
NASDAQ
Look, and then it's
at
going to
section
go up.
highs. As we
As soon as
speak
I
right now, new 52-week highs, of
sold
course,
the
for
call,
them
it's going
as
to
well.
go
Greg,
up.
thank you, Steph. Adam as well. I'll see you back in New
Great
York.
to see you.
One day soon. I know that. All right. Let's get to our Twitter question of the day.
You gotta be fucking shitting me, man. You
record high in 2023?
fucking piece of
You can head to
garbage
CNBC Closing Bell on Twitter. It's
motherfucker.
simple. It's yes or no. The
Sorry if you
results
guys
are
have
later on
kids.
in the
That's.
hour. In the meantime, let's get a check on some top stocks to watch as we head.
It's not even that it went up or like would have saved me money or did anything. I just.
Well, thank you. Let's talk about Shopify joining the AI.
It's in an
rally right now.
uptrend.
E-commerce company announcing a new AI chatbot.
Just not sure. I'm just not sure about AMD. AMD is like the only stock that's just sitting here that rallied and is just struggling to go higher. It's got a double top getting ready to be put in. A double top. In a double top.
Because insurance is more expensive these days.
I don't know. I just don't trust it. I don't trust AMD. But it might go. You gotta be flipping shitting me. I could have at least got out for what I got in for.
All states you can see on your screen, Travelers and Kemper,
Wow.
all of those names are down at least
I need to start using my screens correctly.
Christina, thank you. We'll see you in just a bit. We're just getting started. Right here from Lake Tahoe. Up next, your big bank setup. JP Morgan, Citi, and Wells all reporting their results tomorrow. Now we hear from top analyst Mike Mayo today. He's got the key factors he says could impact those earnings. We are live from beautiful Lake Tahoe today, and you're watching Closing Bell on CNBC.
Let's see what kind of orders we get here with AMD. And see if we see these, this level 2. See if we get some big sellers trying to step in up here. But I doubt you will. Because there's only a couple minutes left, and I didn't feel comfortable holding along there. This is where I think we're going to go. But this is where I think we're going. Okay, you son of a fucking bitch, man. Alright, this might be shop's time. It might be time for shop.
Do have some late-breaking news we want to share with you this afternoon. St. Louis Fed President James Bullard is stepping down effective next month. Bullard leaving to take on a new position at Purdue University that starts on August the 15th. He's been a member of the St. Louis Fed for the last 33 years.
It's a nice break and retest there.
Search firm being hired to assist in finding Mr. Bullard's replacement, that according to the St. Louis Fed. Big banks are in the green today ahead of the unofficial start to earnings season. JP Morgan,
So,
Citi, and Wells all
we have our
reporting
target.
their numbers tomorrow morning. Bank of America, Morgan Stanley reporting next week, along with a slew of regionals. Let's bring in top bank analyst Mike Mayo of Wells Fargo ahead of all of that. And it doesn't seem like there's, much expectation that we're going to hear a lot of greatness out of these numbers, is there, Mike?
Second quarter bank earnings, it's a battle. I term it the 3 R's: rates, recession, and regulation. The battle with higher for longer interest rates is going against banks, and that's why estimates have been going lower for almost all the large cap banks, except for JP Morgan, by the way, this year. The battle with the recession, it's still potentially to come. I think that'll be a positive story, though. I don't think you'll see too many signs of a recession from the banks. And the third battle is regulation and the new rules that are about to be put in place. And you just had the stress test, and only a few of the largest banks are buying back stock. Many of the regionals will not be doing it. So, rates, recession, regulation will be top of mind, and that leads to
I don't know why I keep forgetting that I could. Oh,
so I expect most banks to guide for
got it just in
lower
time.
net interest interest income
Sheesh, that was
or
close.
interest rate-driven banking revenues just due to higher funding costs, which are taking a toll. Now,
That I
having
could
said
just buy
that,
the
these
stock and
stocks
not have to worry
derated
about
by
premium and
25%
theta.
over the last 3 years. And Scott, you're talking about this high stock market. The PE on the stock market was 23 years ago. It's 20 times today, and the bank PE has gone from 12 to 8. That's getting to kind of ridiculous levels, especially if we're not having a hard landing. So our top pick has been JP Morgan. Goliath is winning. The larger the bank, the more sticky the deposits, the more they're equipped for a recession, and the less regulatory changes to come. And some other of the big Goliath or GSIB names that have had regulation for a decade and won't have.
I want the big boys to step in. I want to see a few thousand share order. I want to see like a 4 or 5, 10,000 share order. Bang! Give me that Shopify at $70. Let me spend 70,000 or 700,000 on it. Boom!
So that should help the likes of
Well,
State
they were
Street,
selling
which also, by the way,
1,000.
is buying back over 15% of its stock this year. State Street had a terrible first quarter. The stock was down 7% after that day. So we just think that State Street has a chance to at least be better than the first quarter. And even if it's not good, they'll be in the market, I think, buying back their stock. And then there's Citigroup, which is proving that it's not your parent Citigroup.
Man, what a frustrating day.
Company that is outperforming
Frustrating
the
day.
regional banks, it's outperforming many of the
Fucking
European
Tesla,
banks, it's outperforming certainly
Coinbase.
Credit Suisse.
If I gotta hear that
Won't be
noise
perfect.
one
I don't
more
think
time.
Their guidance was very good for expenses or capital markets, but what will look good is that they're showing resiliency
Unbelievable.
despite some of these headwinds that have hit the industry. And I do think we're in the 7th inning of these downward earnings revisions.
It happens. We're human. You have your good days, you have your bad days, you have your good weeks, you have your bad weeks.
Week and a half, then more people will be ready to step in. And as you can see,
The
people are
ITO.
already buying these banks before the earnings.
I'm really curious if we're able to get a gap up tomorrow on
One
these.
answer with your entire view off one
Just like I
question, so
thought
we're
with
gonna
Shop,
leave it
but
there.
I think
Mike,
it's going to
thank
get
you.
taken
It's
over.
Mike Mayo. We'll see what happens. Up next, making the case for caution, American Century Investment CIO of
Yeah, I don't know if I
Multi-Asset
can do it.
Strategies maps out the biggest risks he is seeing in the
AMD.
market. It's right after the break.
See what that bastard. God damn it! I'm throwing in the towel for the day. Good luck to you all. Unless I see something, I'm not doing ish. I'm not doing shit. I'm done for the day. I just can't. I'm just tired. I keep falling asleep. FAMD. I can't believe it. Just no excuses. I just didn't perform today. Tesla hurts, man. That one hurt. So AMD's retesting this level. Maybe I'll pay up for it, and or I wait for tomorrow, or I take a swing trade for tonight and kind of load up on the position right here for the bounce. There's a couple different ways to go about it.
Do have breaking news out of Hollywood this afternoon. The Actors Union voting to go on strike, basically halting production across Hollywood. Members of SAG-AFTRA will join the more than 11,000 already striking film and television writers. Media stocks holding steady at this very moment on the news as we look across the landscape at names like Disney and Paramount, Warner Brothers, and Netflix. To remind you, we're live today from the American Century Championship Celebrity Golf Tournament here in beautiful Lake Tahoe. Joining me now is one of the top athletes competing in this week's event, winner of an astonishing 94 international tournaments, widely considered one of the best of all time, Swedish golfer Annika Sorenstam. Welcome. It's nice to see you again.
Likewise. Thank you. Great to be here.
You just finished your last U.S. Women's Open ever at Pebble. Well, that was last week. That's amazing. You've had an amazing career.
Thank you. Thank you very much. Yeah, I mean, it started, my first win was a U.S. Open in 1995. And then, I finished, full-time in 2008. And then I've nibbled in two of them. And Pebble Beach was, I would say, the cream on the top.
What's been the secret to your longevity success?
Well, I love the game. I'm super competitive and, very disciplined, very focused. And but overall, just wanting to push myself and see how good I can get.
Yeah. It's interesting. That's a good segue in terms of you've tried to push yourself as far as you could go. Now you're trying to push others. to see how far they can go, in a sense, with your foundation, which you started in 2007. Can you tell us a little bit about the efforts that you're doing there?
Yeah, it's called the Annika Foundation, and we've been trying to inspire young girls around the world for the last 15 years. We have 7 global tournaments. We have over 60 countries represented in these tournaments, and we've raised more than $8 million to give back to the game of golf. And many of the players you see on top of the LPGA now, we call Annika alumni, whether it's the Korda sisters or, you could just mention a few of them, Maria Fassi, and, but it's fun to see the next generation blossom and be able to provide these playing opportunities. And because I wouldn't be here if it wasn't for golf.
Yeah. You've given $8 million back to junior girls golf over the last 15 years. Congratulations on that. And girls are still fighting for equal pay. We see it in all sports. And the Women's World Cup is just around the corner. They've achieved equal pay.
There's the break, guys. There's the break on shop. Motherfucking shop, dog. I might have my trade.
Most marquee of events.
You got to pump it up.
Yeah, we got to keep pushing. I mean, it's nice to see the purse of the Pebble Beach, the USJ stepped it up $2 million. That's a big step. But I also think playing the venue at Pebble Beach was a big success, a big winner in this whole thing. And it's just going to grow from here. We got to keep pushing, keep being out there, and fans out there, go watch women's sports. I mean, they work hard, they're committed, they're disciplined, and it's fun to watch, and they're good.
You were. It's not even an argument, the most popular female golfer for so many years because your dominance was extraordinary. How, when you were playing, if at all, did you think about what life after golf was going to mean from an entrepreneurial or business standpoint?
Well, in the beginning, I was so focused on golf. I mean, that's all I cared about, sleep, eat, and practice golf. And
it showed.
But then you realize there are other things in life. I got married to my husband, Mike, and we have 2 kids, Ava and Will. And then, I do have an entrepreneurial spirit. I like to build things. I mean, Annika Foundation is one of them. And now I'm spending a lot of time on Fizzy Bees, which is a drink that we created literally 30 minutes from here during COVID. It's a vodka-based, full sparkling classic cocktails. We're women-owned. We give back to the bees. So I continue my hard work, my discipline, and we're selling here in Nevada, and we're expanding, and we're talking to distributors. The goal is obviously to be very successful there, too.
You launched it during COVID?
Yes.
What are the challenges that came about with that?
Well, I mean, we had a lot of time, so that was not a challenge. And we were drinking and eating, having fun. And my husband has a lot of allergies, so we have organic honey at home. And I thought, why don't we just mix some drinks and make them healthy with good ingredients? And then, there was a lot of products on the market, but I really didn't like any of them. So I looked at him and I said, hey, why don't we make our own? He said, sweetie, you're such a busy bee. We don't need more projects. Therefore, the name Fizzy Bees.
Yeah, so you sell in 4 states. What's the outlook in what is, without question, a very competitive marketplace?
I have realized that, yes. The only thing I can compare to is golf, and it's very competitive. And I like to say I'm a winner. I work hard. I'm dedicated. We're trying our best. It feels like we are doing well. I don't really know what to compare with. But my goal is to shoot 59 in that business.
I'm just waiting on the pullback here to like 70, this low 70 area. If it's not able to break non-EMA, we just extend higher. Maybe I'm probably going to take the long. The daily, weekly. Look at that. Boom. Blasted through the 100-day. Just feel like we could test the top side here. Look at this fucking SPY, guys. What the fuck? Oh my god, man. Don't you know? Pump it up.
Eastern.
15 minutes before the closing bell, Christina Partsenevelos is back with us with the key stock she is watching. Christina?
Great job today. If you guys made money, good for you. I'm going to go do something. What happens if Putin drops a bomb on Ukraine and nukes them? There's always headline risk, my friend. Now, if you bought a couple, I would take a couple off. You got one, that's your call. I can't tell you what to do. I would. What do you want? What are you going to get out of it is what I'm going to say. So what's going to happen is you're going to wake up tomorrow. You're up 100% now. The stock could even go up, but because of overnight, the theta is still going to hit it, and it's going to be like, if not lower or the same, even if the stock goes up. So you're going to deal with theta overnight. Also, how much more do you really think it's going to go? I mean, if it's at 100% and this is our target at 551, what do you got, like another 20, 30%? Yeah, it is. It is pumping. So I would just look at it that way. Like, how much more are you going to get out of it if you've gotten the most out of the contract and stuff like that? You know, that's what I would do. You know. Oh my gosh. So I'm going to go have a smoke. I'm going to go have a cigarette. So, frustrating day for me. And I'm not red. It's a frustrating day. I didn't perform. I tried to go long AMD just a couple minutes ago. And it wasn't, I thought about holding it overnight or like, you know, I didn't know exactly what I was going to do. I just knew that I got long AMD. And then it felt like it shook me out. It shook me out because I was like, man, what am I doing? You know, more importantly, though, I'm more frustrated about Tesla because I looked at it and spent my time looking at Shopify when I shouldn't even have been looking at it. But it was strong during the morning off the long, so I'm like, okay, bet. Now, look, here's the test. I might actually grab some. I'm actually going to go long Shopify right now to see if I can get a gap fill. But if this level breaks, you know, I'm out. The thing is if I'm in options, I can't get out. That's the other thing. Let's see what happens here. What do we got? Oh, 350. We have 10 minutes. 10 minutes. I've been waiting for this setup all day. I just don't know if it's worth it. I really don't. Yeah, that does suck, man. Sometimes. How long were you holding on to them? Oh, yeah, for sure, man. For sure. Yup. Deontay actually has been holding it. He was talking about it when we brought up the news. I gotta do better. Yeah, you know, if you need it, you need it and shit. So.
Market on close and balance, $1.3 billion on the buy side.
Tesla will be the one that got away from me today. Come on, man. This son of a bitch got away from me today. I seen it here. I was watching it here. I was watching it this morning for the turnaround. And my target was going to be high a day. And if we got through it, it was going to be yesterday's high of day. And then to get here. Because the risk to reward was there. And it did it. I forgot about it. This would have even been a nice trade right here. The break, the pullback to initial morning high, pre-market highs. What is this? Let me see here. Do we have another one? Are we testing another? Is it trying to test this 277.58? I'd hate to try and go long on a Friday and not get the gap up. That could really hurt you. It's really stupid, to be honest, if you're playing dailies to try and... It's better to just buy the stock itself. Yeah, I have a couple of things that I use that'll, you know, that it just has, what it does is it has the bid in the ask on it. That is cool though. They just gotta they gotta have like a better, like I think what they did with Jimmy fucked them up. Not letting people sell and having, you know, the clearinghouse have to, that whole mess. I just think it's going to be hard to bounce back from that. I really do. I hope you guys had a good day. I hope all of you guys had a great day. You guys made money today, or at least didn't lose a ton of money. It's not about if you made money or lost money. It's about being able to manage it and staying in the game. I was so tired all afternoon. My body just kept trying to fall asleep, and I'm like, nope, I'm not doing it, because I know if I fall asleep, I'm gonna have trouble falling asleep tonight, and I'm gonna get to bed late, and you know, just trying to keep myself in on a schedule. So tonight I will go live, obviously, as I do always. I'm just gonna bring up XRP. We're gonna talk about Fed Bullard and if it means anything for this market, because as soon as that news came out, the news came out right here, and we rallied. As soon as that news came out, the market rallied.
After CEO Bob Iger sat down with our very own David Faber in a wide-ranging conversation this morning.
And then I'm going to go, and I'm going to just start it this afternoon. I'm going to go get something to eat. I don't know what it is I'm going to get, but I'm going to go get something to eat, and then I am going to get busy. Get busy living, or get busy dying. What are you doing? Which one are you? But thank you guys for joining us. Thank you guys for the likes. I only got 3 likes, but guess what? I'm grateful for every single one of them. And I appreciate you guys. I really do. I'm going to turn myself around. These trades, I'm going to get turned around. It's, you know, it's a lot. It is what it is. I gotta, I'm starting to get used to, like, streaming and doing, you know, trying to do what it is that I do, finding the opportunity. So I'm getting used to it. God, that fucking sound. We got 5 minutes. I'm going to keep these up. You guys have a great day. I'm going to keep it up. I'm going to walk outside for 1 minute. If you guys have any questions, you can post them. I'll be here. I'm going to make the thumbnail for later. Robinhood, I was long. I'll have to see. I was long. I think I took 4 or 5 trades, and I was like, I didn't want to trade. Like, if I start getting to like that 3rd or 4th one, and I haven't caught a momentum like early, like I bought a dip, I had the game plan coming in. I said I'm long here. I got long. It's going. I'm taking pieces off. You know, usually that's it. I'm only taking that type of trade, and then that's it. Like today, I just been trying to just get it wherever I could. I came in today. The stream was the sound was messed up, and I think it has to do with because last night when I shut my computer off, I let it do what it had to do for like the you know, like to like like it had to program or whatever. You guys know what I mean. Like when you turn it off, it'll tell you it wants to like do whatever it is that it does. And that messed up my OBS this morning. That's why we didn't have any sound. So, but it's all good. Tonight I'm gonna find a few stocks that I think I like. I'm gonna see what they did today after this big extension in the afternoon. and see if I can't catch a move, somewhat of a move tomorrow. I don't care if it's a small cap, penny stock. I don't give a shit what it is. I'm going to get something. I don't care if I got to go to gold, if I got to go to energy, if I got to go to solar stocks. I don't care where I got to go. I'm going there and I'm taking it. If the market ain't going to give it to me, I'm going to take it myself. And there's a bounce. Right into the close. So yes, I will be back in 1 minute. I think we do have a few earnings that are going to come across the wire here in a minute. Look at Apple. Did Apple end up going? Ooh, it kind of did, but it didn't. It came back. But AMD didn't. AMD was the one that I chose. I thought about going long Apple. Look at it. That's a failed breakout. That's big, guys. I would watch out. I'd look at the S&P turning around. I think you got max bullishness right now. You might get...
Well, we'll see what the next move from Microsoft.
We'll see what happens, guys. We might get a turnaround soon.
Anything you can do, I can do better. As it relates
So,
to AI, Steve.
But it's not just that. It's not just doing this
look how it had the failed breakout. That is weird.
In addition to rolling out new features for its chatbots, has plans to sell it to enterprises and so forth.
Why do I say that's weird? Because
that doesn't mean Google isn't going to unveil theirs.
it's kind of why I got out of AMD, and it's why I didn't take Apple.
Mike Santoli with just about 2 minutes to go in the
That's why. It's kind of why I took AMD, and then I kind of. I don't know why. I just felt like I got shooken out of AMD. It is what it is. I got shaken out, and I'm like, you know what? I'm not gonna let myself just take trades for the hell of it and make stupid ass decisions. There's no momentum. Thank you guys for being here. I'm going to leave this up because there is, I think, some earnings that are going to come across the table. Fucking Tesla, man. I missed that one. I tried to get long tests. I thought about getting long tests to the high of the day, and I was giving it a little bit, and I forgot about it. I completely forgot about it. Coinbase. What is something nobody's talking about?
The psychology has changed. As I said, it doesn't really mean that the earnings picture and the economic backdrop have changed very much. I'm sure at some point the market will go in search of something to be afraid of, or something will come along. But for right now, it seems as if the sort of self-fulfilling stories are there. I also think it's important. You have names like Alphabet that, yes, they're looking like they're on this great run, but they were more expensive, a year and a half ago. So you can cover yourself with that idea that you're not paying absolute top dollar maximum valuation for these stories that everyone is now all of a sudden energized about.
Talk about things that are coming along. The banks are coming along, right? Front and center tomorrow morning. I don't know if that's the thing that brings people to some level of a reality check on where things are. What do you think?
Yeah, it's going to be worth asking the question, if the market's verdict on where we are in the economy, soft landing, Fed is almost done, if that's true, the bank shouldn't be this cheap. So one or the other probably has to move in the other direction. We'll see which way that is.
All right, yes, we will. Mike, thank you. That's going to do it for us. Dow is going to go out with a gain. Nasdaq's the big winner, 1 2/3%. Does it for us. I'll send it into OT with John Ford.
Strong day on the S&P as well. That's your scorecard on Wall Street, but winners stay late. Welcome to Closing Bell Overtime. I'm John Fort. Morgan Brennan is off today. Coming up this hour, SoFi CEO Anthony Noto joins us exclusively from Sun Valley. His company's stock catching a downgrade from Morgan Stanley today, which says SoFi should be valued like a bank after a massive run this year. And speaking of banks, we've got Goldman's bank earnings playbook. We will speak in a rare interview with the firm's head of financials research ahead of tomorrow's kickoff to bank earnings season. The NASDAQ and S&P closing at the highest level since April 2022, while all three major averages extending this week's gains today. Joining us now, BD8 Capital Partners CIO Barbara Duran. Barbara, welcome. So one trading day left in a week defined by that cool CPI print, now the PPI report. Equities up, yields down, bank earnings start tomorrow. Do you trim more here, waiting for a pullback, or do you hold tight?
Well, that's a good question, John, because in the last month or so, my instinct has been to trim positions because after such a strong run in the first half, it just sort of common sense and risk management and years in the business, that's the prudent thing to do. However, the inflation numbers that have just the CPI, the core CPI, which was the best in 2 years yesterday, is very encouraging. It shows inflation. If you look at the core CPI number since last September, it has steadily come down from 6.6 to 5.7 in December. We had a little tiny blip up in March, but it continues to trend down. So now we're at 4.8%. And if we keep at that rate, it will continue at year end, could be 3.8%. Next year, mid-year, 2.8, which is still above the Fed's target, but it's showing we're going the right direction. Meanwhile, we have strong jobs, strong wages. We've seen the recent payroll numbers. The ADP number last week was a big blip. Jobless claims this morning, even it's a shortened week, still showed no signs of stress there. So the economy looks in decent shape, although there are clearly, slowing parts of the economy, mostly the interest rate sensitive. So I think what you see from here, the question is, what happens now? Have we seen most of the gains? And I think we haven't. I think the Fed will, it's pretty much baked in that they're going to raise in a few weeks, but then I think they're going to be on hold. And unless something happens, inflation doesn't keep coming down, and there's no reason to think it won't, I think you will continue to see the market hold up. So the question is, where do you be? So
what do you do with a stock like Delta, which you own in some accounts? Best in class airline, travel has been strong, services have been strong. The CEO on CNBC today sounded pretty bullish. Do you just hold on to it? Do you add to it? What?
We know there's still this post-COVID behavioral changes. And normally airlines, even though they become an oligopoly, have tended to be very cyclical. So you go, okay, they're discounting the current traffic. Things are going well. And Delta in particular, it is a best in class. I agree with that. I've owned it for a while, but you've seen they've beat the numbers on all metrics. Their guidance going forward is strong. In fact, they upped it, which is interesting. You think, okay, maybe this is it, but they're paying, capital expenditures will be down. Free cash flow is up, and they're also still only a 7 PE, where historically they're 8 to 10. The key question, though, of course, is demand. And I think demand will continue to hold up. There is this incredible pent-up demand, and consumers are spending. And this year, it's international. Last year, you started to see a little bit of international, but I think as Helene Becker pointed out earlier, you were still getting tested as of June to get back into the country. And if you got COVID, you were stuck at whatever country you were in. So I think there's unbelievable demand that's going to continue well into next year. So I think their optimistic guidance for next year could hold up. And this stock then could be a $70+ stock a year out from here.
Oh, wow. Okay. Well, Barbara, stay with us. We also want to talk today's big Fed news. James Bullard, president at the St. Louis Fed, announcing he's stepping down next month. Let's bring in our senior economics reporter on the Overtime Newsline, Steve Leisman. We're talking to you about this since the news broke. I mean, it seems like, bedtime for hawks in a way.
James Bullard is definitely at the moment a noted hawk. He was not necessarily in 2009 in the great financial crisis when he did advocate for quantitative easing and for the Fed to take action to get back to its 2% target. But in a time of higher inflation, he has indeed been a noted hawk. He was early in advocating for those 75 basis point rate hikes that we have undergone in the last summer. He was also strong about reducing the balance sheet, and also the idea that maybe the funds rate had to go a lot higher than many in the market believed, certainly at the time. And so he has garnered the general impression of being a noted hawk on the committee, and maybe some on Wall Street might be kind of relieved that he's going, but I don't think that will have a measurable impact on the fight against inflation.
And partly I say bedtime because we had San Francisco Fed President Mary Daly on CNBC earlier today with you, Steve, and she seemed maybe a little less hawkish than she has in the past. Take a listen.
2 rate hikes this year is still a reasonable projection. It's for that very reason you said. It is a risk that we under-tighten. It's a risk that we over-tighten. And that's why data dependence, meeting by meeting decisions is so important right now.
A little more measured, maybe. She acknowledged the CPI print was surprising in a good way, wouldn't you say, Steve?
I would say so. I mean, she's still on board with the idea of 2 more hikes. Didn't talk much against that, but didn't say it was definitively going to happen in the interview that I did with my colleague Sarah Eisen for sure. She is in the camp, I think, of those who will take it meeting by meeting and based on the data. And I think there's other Fed folks who think, you know what, almost no matter what the data say, they think the funds rate is too low. And so they're a little bit more hell-bent on getting up those 2 additional hikes. But look, if inflation keeps coming down, I think the Fed may well stop after at least 1 hike here. I think it's notable that Bullard has been there, John, for 15 years. He is the dean of the Federal Reserve Presidents, the longest-serving one, and he will go on to become dean of the business school at Purdue. And he'll be missed, and it was kind of an unusual departure in the sense that he resigned as of today, but it looks like it's because of the job offer he has. He seems to start at Purdue August 15th.
All right, Barbara, on this Fed news and responding a bit to Mary Daly, how much does it matter when the 2 hikes come, just as long as there are no further big shocks in the economy? Do you think that investors should pay close attention to that anymore, or are we pretty much past the Fed and more onto the fundamentals now?
Well, it looks like the market is looking past the Fed. I mean, I think they've sort of the 25 bips is baked in. The probabilities even for a November hike are down to 21+%. I think if there's going to be another hike, because as I said, I think the Fed will have to stay high, where they are and where they're going to be in another few weeks, because there's going to be because they have to continue, to hold up here because the inflation is coming down so slowly, but I think later on in the second half, you are going to start to see there's all this fiscal stimulus that's sitting in the system. It's the CHIPS Act, it's the infrastructure bill, 1.2 trillion that's been filtered out to the states and localities that will start to be put to work. And that's going to be more jobs. So we'll see. People are looking at the second half could be a slowdown. Well, the fact is, when you look at the earnings estimates for third and fourth quarter S&P, they're actually going up. So there's a widespread feeling that this is the trough in earnings, which interestingly, typically the market does bottom 6 months before the trough in earnings. So which would be, a happy coincidence, in terms of what we've seen the market do this year. So if anything, I think a second rate, we might start to look at it later this year just because of all that fiscal stimulus. But otherwise, assuming inflation continues to dribble down, in the core PCE and core CPI, I think the Fed will hold its pattern after this hike.
All right. Good intel for our viewers there. Barbara, Steve, thank you.
Thank you.
Also, the dollar hit its lowest level today since April 2022, on pace for its worst week of the year. Senior markets commentator Michael Santoli joins us now from the New York Stock Exchange with a look at how the dollar's bust is a boost for foreign indices. Mike?
Yeah, John, that's the reflex trade-off. In fact, the U.S. dollar index almost in mini crash mode in the last week, down 3%. It's a big move for a currency basket. And you take a look here at the ACWX, which is all foreign markets in the world, essentially all markets except for the U.S. in the all-country world index. And look at this jump higher just in the last couple of days to try and catch up. As you see, over the last year or so, foreign markets have actually kept pace pretty decently. They've made up some ground over many years of underperformance. So we'll see if this ends up being one of the areas where you see some rotation. Remember, the S&P 500 market cap weighted, very, very much driven, at least for a few months, by those big tech stocks that are very much U.S. animals, and we'll see if you get some rotation. Now, another spot where you might be able to see some catch-up, some rotation is everything in the S&P aside from technology. Now, of course, there is an ETF that tracks everything in the index aside from the tech sector. That's in orange right here. So what I think you could take a little bit of comfort in if you've been worried about the concentration of the market is a very similar shape to those lines. So it's not been, one going up, one going down. It hasn't been completely a zero-sum game. And you've seen a little bit of acceleration in the outside of tech. What I do find interesting, too, is ex-tech is still below, that's a bad line, but it's still, trust me, below the highs from last summer. Last August, S&P, of course, has taken those out. And I will mention that even though it's S&P X technology, it does still have all the communication services companies. It has Amazon, Meta, Alphabet in there. So essentially, it's strictly speaking, does not have Apple, Microsoft, NVIDIA, semis, and software, John.
But, Mike, let me ask you about the other flip side of a weaker dollar, which is the impact on multinationals, many of which are big, many of which are in tech in one way or another. Won't their earnings look better than some might have expected as the year continues, if indeed the dollar stays weak or weakens further?
Probably so. In my experience, that game is a little tough to play. In other words, the market either kind of figures it out and there's no real thing to exploit there, or it's a benefit that's sort of widespread enough and hard to isolate enough that I'm not sure it should be the sole basis of things. Now, yes, technology is one of the most global sectors, but you want to talk about some of the other, communication services stuff as well. It's got plenty of global exposure there, too. I think what you're looking at is some areas that would be left in the cold, probably some things like, utilities and retail, very domestic sectors that maybe would not be as big a beneficiary.
All right. We will watch that as well. Mike, thanks. Bank earnings kicking off tomorrow. JP Morgan, Citi, Wells Fargo, and State Street set to report, while Bank of America and Morgan Stanley come Monday. Richard Ramsden of Goldman Sachs joins us now. Richard, what's the big sort of headline to watch or number to watch out of these earnings? The smaller banks had been the area of a lot of concern. The bigger banks seem to have been okay up to this point. So what are we going to learn?
Yeah, so I think the market's going to be focused on three things tomorrow. First, I think there's going to be a lot of focus on what's happening to deposit funding costs within the banking system. I think the good news is, the deposit instability that we saw around Silicon Valley Bank has really subsided. I think the bad news is that deposit funding costs are increasing very rapidly, for regional banks, but also for the larger banks too, and that's putting some pressure on margins. So I think there'll be a lot of questions around what banks are seeing in terms of deposit flows, as well as expectations around deposit costs.
You guys might actually get to see. I know. Trust me, I know. It's crazy. It's turning around actually.
I think a lot of focus on commercial real estate in particular.
So how are we going to play this? I'm going to do this right now, but I also want to see what, real quick, I got two things, and I'm going to go. The S&Ps are pulling back pretty decent, guys, which it's whatever. Let's see what AMD's doing. All right, because look,
on commercial real estate. So you're saying we're going to get commentary from the larger banks that are
man, guys, what I'm saying is I might buy AMD after hours off of this support, but I'm not sure what exactly I want to do, because I have, if you look at it, we're getting ready to roll back up. Look at the end of day volume. Let's look at this 15-minute chart. I need to work on like doing push-ups or doing something during the day, because I noticed like around lunch, like watching level 2, reading these fucking numbers coming down. I gotta stop cussing. Watching level 2 and the tape, I get so tired. And it messes me up.
Yeah, I think the third thing is
nice. That's what's up, man. I thought about them, but they were. There's a reason why I didn't take them. I almost see when we called out Coinbase. I missed my entry. I tried to get long Coinbase right here on this. It had its extension, 3-minute chart. I got to take this off so I can actually show you where it was. We had both. We had the 1 minute up because it's going to move the moving average. So, because I had it without it.
So would you say overall there's a risk?
1 minute. It was on it because it was right. I'm pretty sure it was right here, guys. It was right here. And I missed my entry. I literally drew a circle right here. And I had a second time to get it. But I was watching a couple things, and I gotta stop doing that. I just hate that I struggle with like falling asleep around lunchtime. So I really think semis can get ready and break out. I think they're ready. I don't know why I mean, I know why I didn't take AMD, but it's due also in part because I am not alert. because I've been sitting here from the morning, just sitting here till lunch. I got to get up. I got to start doing something to get me up and alert. I drink coffee and stuff, but if I don't get up and move, I crash. I crash from it. And then I notice I don't think right. So that's something I'm going to work on with myself tomorrow. I think, so let's look at this. What I want to show you guys, SOXL or SOXX. Look at this, guys. Look at SOX, which is the ETF for semiconductors. So maybe we can play Intel. Well, because the judge ruled, yes, it did, because the judge ruled that it's not a security. It's not a security. Because they got in trouble, like the SEC claimed, and this never happens when they win a case like this. Like that, like they usually don't even go to court. So with XRP, usually they'll just pay the fine. Like it's so messed up, but it happens all the time. If you know, so like Barclays, JP Morgan, Chase, whoever. All right, Coinbase. The SEC will just go along and fine everybody. And they'll say, do you want to show up to court, or do you want to just give us $400 million or $1 billion or $100 million and we'll settle the case? How does $100 million settle the case and actually get things done? XRP was not paying the money, whatever they could pay to get out of the SEC just trying to get money. They said, no, we're going to court and we're going to fight it. And that's what happened is they fought it and they won. The judge ruled that it wasn't a security. So what does that mean for Coinbase? Coinbase just got a whatchamacallit from the SEC. All right? Coinbase is going through almost the same thing. And Coinbase, they list everything. Like they're a registered security for the NASDAQ, and they abide by the rules, and the SEC trying to say that they don't. Well, the rules that are set forth, they follow. So this is going to help them in fighting their case. And this means if they win their case, like, the whole point of what I've been saying on this live stream is even going into taxes, the government cannot charge you capital gains tax on something that they do not consider a security, a commodity, a currency. How can they tax? That's not capital gains tax. So if you're taxing people, then you either consider it a security, a currency, a commodity, something, in order for them to justify by law you paying taxes on something. But if the FCC says, no, this is not a commodity, we don't consider it a commodity, a security, or anything. So what is it? Like, they're so back and forth on all of their shit. And the judge ruled it in their favor, it's the truth. I'm going to tell you right now. If I owned cryptocurrency, I would not be paying taxes, and I would go to court. And yes, I wouldn't be paying taxes. They want to do whatever. I would go to court because there is no regulation. There is no laws. That's the fact of the matter is there is no laws for this stuff. They have to consider it something in order to, first off, charge you taxes for capital gains. Maybe they make up a new rule where it's just like it's a cryptocurrency tax. It's like this whole situation's messed up. So SOXL is actually on the weekly chart running into the 100-day. That might be a problem. This is breaking out. This is breaking out. SOXX maybe? SOX. Yes, Philadelphia Semiconductor Index. This is where I want to get it. I was thinking about getting a job over here. Trying to get a job over there in Philly at this. They actually run and own this. They run this ETF. This is the semiconductor ETF. Look at it breaking out. If it's breaking out, what's Intel doing? INTC. I want to get one of these. Like, Intel might be coming off. I don't know. I literally just came in here. I was trying to show. I'm like, should I buy AMD? It's holding this level now.
with rates going
so
up,
far,
I think is in a period of stability where rates are
the
flat.
volume
we can
isn't
operate
there
incredibly well, and we've done really
on
well
the
while they're
daily.
going up. So
I want to talk a little bit about the student loan
But look at
business.
that.
Of course,
It broke
SoFi
it. Like, we
started
got to
out,
see if it holds it.
in the student loan business,
Got to
and
see
there
if
have
it
been a
holds it.
couple of
Because
big
we
news
still have
items that
resistance
been
up
very
here.
relevant to that. Most recently,
So
the
it's
Supreme
tricky.
Court,
I'm like literally.
that was
I'm frustrated. I
rejecting
did not
student loan forgiveness.
buy this thing.
Also, the news around the debt ceiling. What does that mean for your business going forward?
the most important thing for our country is there's clarity. Now people can decide what they want to do. They have to resume their federal student loan payments.
All right, guys. I will see you guys on the watch list tonight. We'll go over Bullard. We're gonna go over this. We're gonna go over this court case and all that stuff. But yes, Coinbase is pumping because of the fact they just got a. I know the word. I just forget it. Gosh dang it! I can't think of the word right now. It's literally right there in my brain, and I don't feel like pulling out my phone and looking it up. But they all, and Binance too. Binance just got, like, the SEC just went after all them. So now that this court case has been won, like, what does it mean? You know, now these stocks might be okay to be able to run with the rest of the market. See you guys on the watch list. Thank you guys for joining. I'm gonna have a good watch list here. If there's something you can improve on in your life, take notice of whatever that is. Try to do it. Take steps to do it. Write down whatever it is you need to do. If there's something you want to do or something you want to get out of life, write it down. Write down the steps it takes. How you're going to do it. How are you going to get to where you want to be in life? What is it you're going to do? What do you want out of life? What do you want to do in life? What do you want to get out of it? Write it down and start taking action. Appreciate you guys for liking and subscribing. Thank you guys for watching. Tomorrow, but not only tomorrow, into next week, I need to perform, and I need to realize when I start getting tired at lunch, I need to get up. I need to do whatever I need to do to be able to, you know, get my heart rate up and get going, because I definitely get way too tired and it's messing with my decision making. It messed with my decision making this afternoon. Alright guys, have a great night. I will see you guys on the watch list. Thank you guys for watching. Probably 7:30, 8 o'clock. We'll see you then, guys.
When it comes to net revenue retention in particular.